Yes. Can you guys hear me as well? Give me thumbs up if you can hear me. Can you hear me? Now I know that you can see me. Give me a thumbs up if you can hear me. Can you hear me, guys? Am I audible? Good morning. Good morning. Good morning, people. I'm not getting any chat messages, so I'm just worried. Guys, give me a thumbs up if you can hear me. Drop a couple of messages and I'll get going. I'm not receiving any messages from your end, guys. Hello. Can you hear me? Is there a problem with my chat or you people haven't dropped any messages? What is it? Oh, perfect. You guys can hear me. Now I've got your messages. Okay, good morning everyone. I welcome you back to our revision course. So today is our day 3. Probably actually speaking, the way it was scheduled in the beginning, today was supposed to be the last day, but we've extended it by another day because I don't want to skip any topics. And in fact, if you guys want me to do everything, that's impossible. I've told this to you on the day 1. Expecting the entire syllabus to be done in 20 hours is like a magic. If you could have done the entire syllabus in 20 hours, then why did we have such long classes previously? So this is supposed to be a revision course wherein you guys revise what you've already learned. But I'll try to teach you the concepts from the scratch, even if you don't know them. I'll make an effort. But please don't judge me saying that I didn't do it completely because this is not where you do completely. You get that? This is like a highlights of a match. Yeah, you cannot say they didn't show from ball 1 to the last ball. It's just a highlights match. You get that? So we were discussing bills of exchange yesterday. We discussed all the basic parts. What exactly is bill of exchange? It is an unconditional order made by the seller. It is also called as drawer or payee, and it is accepted by the buyer, that is drawee or payer, to pay the money to the seller or holder of an instrument. It can be given to the holder of the instrument. So it is a negotiable instrument. However, in the contrary, promissory note, it's a promise made by the buyer. Buyer is also called as maker or payer, handed over to the seller. Seller is the payee, the person who receives it, and to pay money on an agreed date or after agreed period. Very good. So bearer promissory note cannot be issued. Bearer promissory notes can be issued only by RBI, Reserve Bank of India, and promissory notes are person specific and cannot be transferred. You get that? So we can in short call them that they are not negotiable instruments, but I don't want to make such heavy statements, so I'm playing safe there. Then I told you about date of drawing. Date of drawing is the date on which the bill is drawn by the seller and prepared by the seller or drafted by the seller, and it is sent to the buyer. When the buyer signs it or accepts it, that becomes the date of acceptance. And the bill date means it can either be the date of drawing or the date of acceptance, depends upon the type of the bill. If it is a bill after date, the bill date is date of drawing. If it is bill after sight, after the drawee sees it, it becomes a bill of exchange. Then we discuss due date. Due date can be in order to identify due date, bill is categorized into two categories. Number one, bill with a specific date mentioned in it. Second one, the bill with a specific period mentioned in it. If the bill has a specific date mentioned in the bill all by itself, that date, what is mentioned in the bill, will be our, what do you say, due date. However, if the bill has a specific period, 15 days, 30 days, 60 days, 90 days, Can it be 180 days? No, it can't be 180. Maximum period for which a bill of exchange can be issued is 90. Maximum period for which a bill of exchange can be issued is 90 days. So anything between like 15 days, 2 months, 3 months, 1.5 months, all these will become what? It will become our bill period. When they give that bill period, how do we evaluate our due date? In such a scenarios, due date is computed as bill date plus bill period. I'll repeat, bill date plus bill period. Then I discussed maturity date, wherein how do we find maturity date? Again, two types of bills. Bill with specific date, bill with specific period. If it is a bill with specific date, the date mentioned is due date, the date mentioned is maturity date. I repeat, if I issue a bill saying that this bill is supposed to be due for payment on 10th of December, if I write the date 10th of December on that bill, 10th of December is our due date, 10th of December is our maturity date also. I repeat, 10th of December is our due date, 10th of December is our maturity date. Now we'll tell, sir, we learned something called as grace days. When do we add grace days? Yeah, I'm coming to that. Grace days are added only when the bill is for a specific period. I repeat, 3 grace days are added only when the bill is for a specific period. When the bill is not for a specific period, when the bill is not for a specific period, you will not add 3 grace days. If the bill has a specific date, that date itself is due date, that date itself is maturity date. So the question is, can the due date and maturity date be same? Can the due date and maturity date be same? The answer is yes. Due date and maturity date can be same. I'm not telling it will be same in all the cases. I'm telling can be same. You get that? Now if I ask you a question, you can be a chartered accountant or you will be a chartered accountant. What will you tell? Don't ever say can, okay? You will. Will is must. Can means option. You can be, but you cannot be. Both are possible. Don't ever say like, okay, you can be. You will. You will do it. That's a determination. So, what is it with respect to due date and maturity date? They can be same, but they need not be. When will it be same? When the bill is for a specific date. When will there be 3 days gap? That 3 grace days concept, when will it come? If it is for a specific period. You get that? The logic is pretty simple, guys. Like I've told you that I'll pay on a specific date. I've told you I'll pay December 10th. In my calendar also I would have written December 10th. December 10th I would have to pay. If I've told you I'll pay after 30 days. So that 30 days end, what day will fall, I don't know now. So the date is not strongly remembered in my mind. So that day I'll give three, you will give me 3 days time to settle. You give me 3 days time to settle. You get that? But if we both agree on a date, I would have to pay on that date. Perfect. Okay. Then what if the maturity date falls on a holiday? You need to check whether that holiday is a known holiday or an unknown holiday. Whether that holiday is a known holiday or an unknown holiday. Known holiday, if it falls, if the maturity date falls on a known holiday, then the previous day, the day before, is our maturity date. If the maturity date falls on an unknown or an unforeseen holiday, it is not the next day. It is the next working day. I marked it in red. Okay, guys, very important. Next working day. Next working day will be our maturity date. I hope this made little sense to you. Now, what are known holidays? We couldn't discuss it yesterday. What are known holidays? Now, different authors tell different things. Different authors tell different things. If you can refer few material will tell Gandhi Jayanti is also, what do you say, national holiday, or what do you say, known holiday. Christmas is also known holiday. You get that? If you check few books, they don't tell Gandhi Jayanti. They only tell Republic Day, Independence Day. Then they tell 31st of, what do you say, 1st of April, and then 30th of September, half yearly closing. 1st of April because beginning of there, and all Sundays. So that's also there. So what to follow? What to follow? Always remember. These are common guys. These are common. Republic Day, Independence Day, all Sundays. Republic Day, Independence Day, all Sundays. All Sundays. These three are common. These three are common. After that, our accounting ke liye, accounts are opened on 1st of April, 1st of April holiday. Half yearly closing on 30th of September, 30th of September holiday. Other holidays, they would have to mention that, okay, this day is holiday. They have to mention. Only if they mention, we'll take it. If not, don't. You get that? Sir, November 14th, sir, I will take holiday. Sir, Vyasa Jayanti, sir, I will take holiday. Sir, Basava Jayanti holiday. No, don't go. This is not public holiday. This is not national holiday. These are the holidays given under Negotiable Instrument Act. Actually speaking, if you guys can do little research now, the holidays list have been announced every year. The list of holidays will be announced every year. We have to go by that. But you guys are not supposed to mug up that holiday list. So they would mention in the question, they'll take it. But for now, what do you say? What does ICAI say? Very good, Harshit. Harshit, what ICAI says is these things, okay? One, they don't specifically mention anything. They don't specifically mention anything. But Independence Day, Republic Day, 1st of April, 30th of September, all Sundays. Independence Day, 15th of August. Republic Day, 26th of January. Done. 2 for national, 2 for nation, 2 for accounts. What are the 2 for accounts? 1st of April, opening of books of accounts. 30th of September, half yearly closing. 30th of September, half yearly closing, and all Sundays. And all Sundays. Sir, how do we remember Sundays? How do we remember Sundays? Should we mug it? How do we remember Sundays? Hmm. How do we remember Sundays? Anyone who can tell me how do you remember Sundays? Should we mug it up? Should we mug it up? Okay, need not mug it up. If it is a Sunday, they have to clearly mention in the question that this day is a Sunday. If they don't mention that it is a Sunday, you will not consider. You will be like, okay, sir, I know, sir, October 3rd, I had been out with my girlfriend. That was Sunday. I know. Don't put your knowledge in there. They would have to tell very clearly that, okay, the maturity date is 3rd of October. 3rd of October is Sunday. They have to mention. Only if mentioned, you will take Sundays. If they don't mention, you will not take Sundays. Okay? They will specify in the question. You need not mug up the calendar. Okay? If you know by mistake, then don't apply that knowledge then. Okay, what are the holidays that I told? Independence Day. Next, Republic Day. Hey, should I tell when is Republic Day? I thought you guys would know. Yes. Republic Independence Day? 14th, 15th. Someone is telling, sir, December 25th. Yeah, December 25th you give. Then April May you give Ugadi festival holiday. Ramzan festival you give. Eid festival you give. Makara Sankranti, January 14th. Shivaratri, February 21st. Every day you give holiday. They will mention beta. Tanuja, only if they mention will we give. We will not go by other holidays. Only national holidays. That is January 26th, 15th August. Then what do you say? 1st April. 1st April. Then 30th September. Yeah. ICI material they have not clearly mentioned holidays thing. You would have to go by Negotiable Instrument Act only. I personally go by this. Yeah. Yes, there are a lot of materials which will tell what to say October 2nd holiday, December 25th holiday, everything. Okay. I'm not telling that it is wrong, but don't take those days as holidays unless it is mentioned. Unless it is mentioned, don't take it. Okay. Okay. Any other day other than this will become like something like Bandh happened, some strike happened. All this will become unforeseen holidays. Now I will do quick summary. Okay. I'll take some 5 minutes and I'll let you know how to basically compute. Okay. Date of drawing. Next is date of acceptance. I wanted to previously type these questions and then keep it ready, guys, but was unable. After the class yesterday around 5 o'clock, 6 o'clock, I had no energy. Couldn't do anything other than just lie on the bed. That was not meant resting, but I couldn't sit and work. I had to like slog in the night and then do little and then prepare the file, but it was a little difficult. Sorry. Okay, now date of drawing, date of acceptance is given, and then type of the bill will be mentioned. And we'd have to basically compute the due date and maturity date. Shall we go for it? Okay. No, no, no. The full year closing is not mentioned, man. Akshay Naveen, not mentioned, so we'll not do it. Okay. Now, let us assume date of drawing. Date of drawing to be somewhere around, what do we take? Shall I take 1st January? 1st January 2020. Let us take the date of acceptance to be 2nd January 2020. Now, okay, let us go the type of bill as bill after date and bill period. Bill period. If they give 2 months, what will you do? What will you guys do? Simple thing, guys. Simple thing. No, we would have to compute due date and maturity date. Okay. Now, write one like that only. Okay. Now, after one, there is January. Now, which date are we going to consider bill after date? Are we going to consider date of drawing or date of acceptance? Date of drawing. They have given months. Add months to months column. So, we have how many months? We have January. January is first month. Plus, they've told 2 months. I'll add 2 months here. You get that? Slash 2020. You get that? That will give me 1/3/20. You guys get that? 1st of March 2020 is my due date. Now maturity date will become what? Maturity date I'll write 1 plus 3/3/2020. I'll write like that. It will become 4th of March 2020. You get that? This is an easy one. This is an easy one. This is an easy one. Come on, let's make a little complicated one. I'll write it like this only. 1st of January 2020. Okay. Then this is again same. I'll keep it as 2nd of January 2020. Okay. Then this I'll keep it as bill after date only. And this I'll make it 60 days. Now when I say 60 days, 60 days is approximately 2 months, isn't it? 60 days is approximately 2 months. 1 month, 30 days, 60 days, 2 months. So, shall I read it as 1st of March only? No, I can't read as 1st of March. Should I read as 1st of March? No, I should not. What will I do? I would have to add. What I'll add? I'll add days to this. Previously, there was 1. What to say? 1/1/2020. It was 2/1/2020. Yeah, they're given months here. So I added to the months column. Now they've given dates. So I'll add it to the dates column. How do I add it? Now, 1st of January plus how many days should I add? 60 days. 60 days slash which month? 1st of January. January slash 2020. Done. Now tell me what is 1 plus 60? 61st January 2020. Now is there 61st January? January how many days are there? 30 days. January how many days are there? 30 days. So what I'll do is I'll do minus 31. 31 days beyond, after 31 days it will fall to the next month. After 31 days it will fall to the next month. I'll do minus 31. But when I do minus 31 I would have to do plus 1 here. You guys get that? If I do that, minus 31 plus 1. Ayyo, andavane. Why is it again going like this? Okay, fine, I'll do it a little differently. This is not working this way. Why? My addition will happen like this, guys. DDMMYY. Okay, build it. What is build it? 1/1/2020. Next, bill period. Bill period is how many? 60 days. 60 days. I'll write in the days column. I know. You people do it. You people count it. I've seen people counting it in a very different way. It will take time. I'm trying to teach you something which will actually save a lot of time for you in the exam. Okay. Now, if I do this, what will I get as my due date? Okay, I'll get 61st of January 2020. But 61st is not there. Am I right? January, how many days are there? 31 days. So I'll subtract 31. After 31 days, the remaining days fall to February. So I'll do minus 31 here. I'll do plus 1 here. You get that? I'll do plus 1 here. If I do that plus 1, what will I get? 30 to 2020. Now guys, you would have to check, is there 30th date in February? Is there 30th date in February? Now 30th is not there in February. February will either have 28 days or 29 days. When will it have 28 days? Yeah, when will it have 28 days? Every year. When will it have 29 days? Leap year. How do you identify whether it's a leap year or not? You divide 2020 by 4. Any year you divide by 4. If you get a whole number as the answer, 505, it's a leap year. It's a leap year. If you don't get the whole number, it is not a leap year. If you don't get the whole number, it is not a leap year. Now, for example, 2021. If it was 2021, You get 505.25. 2021 is not a leap year. You get that? 2020 is a leap year, 505. So there are 29 days. So I'll write minus 29 here. Then what will I do here? I'll write plus 1 here. Then what will I get? 20, 30 minus 29 is 1. 2 plus 1 is 3. 20, 20. So this is my due date. You get that? Now I would have to find maturity date. I have to find maturity date. How do you find maturity date? Plus grace days. Grace days. How many grace days? Add 3 grace days. 3 grace days. 3 I'll add here. Then what will it become? It will become 4th of March 2020. Okay, once I'm free, I'll check Telegram messages. Yes, I will. I will. So now tell me, what will be the maturity date? What will be the due date actually? Due date would be 1st of March 2020. Maturity date will be 4th of March 2020. Yes. Okay, I'll give you one more example now. One more example. Now have a look. 31st of January 31st January 2020. Okay. Now date of acceptance, let me keep it the same date. 31st of January 2020. Okay. Now assume that this is again bill after date. This time for a change, I'll give months. Okay. I'll give 1 month. Now tell me. 1 month will be what date? Due date 1 month. No. So can I write 31st of February 2020? Can I write 31st of February 2020? No, I can't write. Why? 31st of February is not there. See, it's not even becoming the date format. It's staying just like that only. So 31st of February is not there. Do you guys get that? So what do we do? February has only 29 days. February has only 29 days in 2020. So can I take 29 over 30, 31, 2? Can I write as 2nd of March 2020? Can I write so? 2nd of March 2020? No, I can't write 2nd of March 2020. Why? The answer is pretty simple. Whenever it is the last date of a month and you're supposed to add 1 month, that consecutive month may last date will be our due date. What is the consecutive month? February. 29th of February 2020. This is my answer. What is it? 29th of February 2020. 29th of February 2020 is my due date. Now if I add 3 days, 1st of March, 2nd of March, 3rd of March. Okay, 3rd of March 2020. That will become my answer, maturity date. Did you guys get this? So whenever you're supposed to add months, that corresponding date doesn't exist. If the corresponding date doesn't exist, then the last day of the month will become the due date. Whenever the due date is the last day of the month and such date is not there in the consecutive month, in the corresponding month, then the last date will become our due date. Done. Now I'll show you a little differently. Have a look at this. assume I give 29th of February 2020 as my date of drawing, and assume that same thing is our date of acceptance also, and it is a bill after date for 1 month. Now tell me, what will be the due date? So 29 is the last date of the month. So 1 month they've told. Can I take 31st of March 2020? Can I take 31st of March? Guys, come on, give me answer. Give me yes or no. Give me yes or no. Can I take 31st of March? Can I take 31st of March? No, I cannot take 31st of March. I cannot take. I would have to take 29th of March 2020 only. Like, sir, why? See, 29th is there, no, in the March month also. So you take 29th only. You not that you take the last day of the month only when this date of drawing is ahead of it, and that date is not there. Here 29th is there, isn't it? So you take 29th. 29th is there in February, 29th is there in March, you take 29th March only. 29th is the month end. When they say 1 month, you cannot take 31st of March. Nah, it's not like that. It's not like that. I hope you got this point. Then the maturity date will be 30, 31st, 1st. So 1st of April 2020. If 1st of April is a holiday, known holiday, and it's given in the question, what do we do? You will take the day before that. Then what will be the day before that? 31st of March 2020. Then we'll take the day before that. Did you guys understand? Little. Did I make sense? Did I make sense? If they would have told 31st of March is Sunday, then 30th of March. If they tell 30th of March is some bandh, then the next working day. Then it will go to 2nd of April. You get that? Then what? Then sir, 2nd of April is Sunday. 2nd of April cannot be Sunday. Why? 29th was only Sunday, no? One Sunday to another Sunday, there is 6 days gap. Yeah? Don't ask such doubts. Okay? I hope this made little sense. Did this make sense? And this is tricky. This is nice, guys. I'll tell you, I don't know if you're appreciating this now. I don't know if you're appreciating this now. Trust me, when you do average weight account current chapter and all, when you have too many dates calculation, you go on writing in the inner column plus 25 days, plus 23 days, plus 24. You do all that. Don't do that. You do this. This will save a lot of time. This will save a lot of time and it will become very easy to do. You need not mug so many things or you need not scribble too many things. It's just that one simple format. You add dates and then that's not the logic. Logic wise, this will fit more good. I used to do that way, but I've upgraded to this and over a period of time, I like this more now. So my suggestion would be this, but if you are very comfortable with that, you can go do that. At the end of the day, what's required is answer. Till the time getting the answers what you want, everything's perfect. Okay. Done. That's with respect to dates. And is there anything else that I have to cover? Yes. Don't be little worried about what is it, Christmas and then Gandhi Jayanti. They would mention in the question, guys. Okay, it was Christmas, it was Gandhi Jayanti, it was holiday. They would clearly mention. If it is there, it will clearly mention. When they clearly mention, you take it as known holiday and you take the previous day. You get that? ICI will clearly mention about that date, that it's a public holiday. It will be mentioned. Don't worry. If not, no, I have a compilation of all the last year papers. I'll share it to you people if you want. Text me at the end of the class. You can see everything, man. Every question on average with account current, they've clearly mentioned. Every question on bills of exchange, if it is holiday, they've clearly mentioned. ICI has not messed up this chapter. They are clearly mentioning it. There is little bit of ambiguity because of difference of opinion between different authors. But don't worry, Negotiable Instrument Act prevails over everything. And ICI has been very cautious about the questions on this topic and they're clearly mentioning how to deal with it. So, shouldn't be trouble. Akshay is asking it out. So 31st of May, 1 month bill period. Then yes. If 31st of May, what Akshay is telling is, sir, 31st of May 20 is the date of drawing, and then I'll assume the same thing to be the date of acceptance also. If it is bill after date for 1 month, then what will it be? I would have to add 1 day to the column month. Oh, sorry, one month to the month column. Yeah. What will I get? 31st of June. 31st of June is not there. June has only 30 days. So then it will become 30th of June 2020. Ayayo. What will be the maturity date? 3 days. First, second, third. 3rd of July. 3rd of July. Did you guys get that? Akshay, I hope you understood this point. Yeah. Then, if in case they've given here bill after sight. If they've given here bill after sight. If they've given bill after sight, then you will not consider this. You will consider this. Yeah. You guys get that? You will be considering the date of acceptance. You will be considering the date of acceptance. Now assume for the same question. For the same question, they've given this. Okay. Bill period is 1 month. Then what will I do? I will do basically 2/8/2020. 2nd of August. Then this will become 5th of August 2020. You guys get that? Bill after sight. If in case they mentioned here bill at what to say, bill on demand, or they can bill on presentment. Bill on presentment. Then there will be no bill period. There will be no concept of, there is no concept of bill period only, guys. So what will it be? Assume that they give 1st of June 2020 and further they will tell it was demanded on. If they give that it was demanded on, like they told 15th of June 2020, then what will happen? This 15th of June 2020 will become a excuse me, 15th of June 2020 will become our due date as well as maturity date. There is no difference. Same date will be our due date, same date will be our maturity date. That's what I was telling you guys some time ago. I hope this made sense. Do you guys understand this? Yeah, we'll go ahead in this chapter now. Yes, let us solve few questions. Shall we, guys? Here we have our material. We're done with all of these. Yes, we were discussing this theory, isn't it, yesterday? Did I explain all of these to you? Bills of exchange introduction, then we discussed bill of exchange, parties involved, date of drawing, bill date, due date, maturity date, bill after date, bill after site. Bill on site and bill on demand are same. Bill on site, bill on demand, bill on presentment. They're same. They are same. Okay. What do you have after that? We have promissory note and then people involved in promissory note. I told you maker, makee, payer, payee, buyer, seller. I will explain all of those to you. Options with the drawer. Now I am a drawer. I'm a drawer. I've sold goods on credit. I'm supposed to receive money and I've received a bill in return. With respect to this bill, I have options. What are the options that I have? One, I can hold it till maturity. I can hold it till maturity. I can keep that bill with me and then say, oh fine, mera number aayega. Yeah, I'll get my day when I can collect this money. I can wait. I can keep on waiting. I can keep on waiting. That's my first option. You get that? In such case, accounting has to be seen from the perspective of drawer and drawing. Next thing, instead of waiting till that day, I can go to the banker and then say, banker, I have this bill against which I'm supposed to receive money on this date, but I want money right now. So the banker will take that bill and will give money, but not completely. Assume that you have a bill for 1000 rupees. Assume that you have a bill for 1000 rupees. If you give it to the banker, banker will keep the bill with him and he'll pay you not 1000 but he might pay you 980 rupees. That 20 rupees is his commission or is his charges for waiting till the maturity date to collect the money from the drawing. You get that? So that's the option. Second option is discounting with the banker. When you discount with the banker, the accounting has to be seen from three perspectives: drawer, drawee, and banker. The last thing is, instead of discounting in the banker, you have another option, that is endorsing it to his creditor. Now, I am supposed to receive money from one person and I'm supposed to pay money to the other person. Get that? The person who's supposed to pay me money accepts my bill. So I have a bill. Instead of giving a new bill to this guy, I pass on this bill to him. It's like this. I'm supposed to pay him 100. He's supposed to pay me 100. I'll ask this guy to pay that guy. You get that? Debtor, creditors, we knock off. I'll ask my debtor to pay my creditor. Done. So that is the endorsement concept. You get that? And there you would have to see the accounting from the perspective of drawer, drawee, and endorsee. Now, who exactly is this endorsee? Endorsee is this person who receives the bill. And me being a drawer, I am also called as endorser. So I am drawer come endorser. The drawee is the person who's supposed to pay me money. And this guy who receives the bill from me, I told you, he's calling. Whenever you it is receiving. Yeah, that guy who's receiving the bill on endorsement is endorsee. And person who's giving it is endorser. You get that? I give the bill. He's calling the bill. That guy is drawee. I am drawer. This guy is endorsee. I am endorser. So I am drawer come endorser. Both the cases I am giving. These idiots are sorry. These people are collecting. Did you guys get that? Yes. Come on. Let us go ahead. Then after this, what is it that we have to discuss? Before we go to the questions, couple of quick points. Couple of quick points. We would have to discuss these things. Hello, did I not put? I had put little above. Huh. What are these? Discounting of the bill with the banker, you understood. Endorsement, you understood. Now, what do you mean by retirement? What do you mean by retirement? Retirement means like you stop working before you die. Once you die, you sit, you die, you don't do anything. Once you die, you don't do anything. Retirement is a name where you don't do anything before you die. You stop working. That is retirement. Isn't it? Does it make sense? Exactly the same. Now a bill is supposed to be maturing after a month. I'm supposed to pay it after a month, but I decide to pay right now because I have a lot of money. So what am I doing? I'm retiring a bill. So settlement of a bill before its maturity date or settlement of a bill before it is due for payment is retirement. What is it? Settlement before due date. What is retirement? Settlement before it is due. Disha is asking, sir, what do we do? 1/4. 1/4 also they will mention, ma. In the question they will mention. Public holiday, they're always mentioning in the question. You get that? But I will tell you, if they don't mention also, you can take it, but they will mention in the question. You have a look at the previous examination questions. Yeah. See, I can actually skip that part wherever there is little ambiguity. But I'm trying to tell you because I have to address the ambiguity parts. No, so you might not like me if I tell all those things which you don't like, or which makes you people little confused. See, now if I don't talk about Christmas and then Gandhi Jayanti and then April, I just tell no holiday, no holiday. I can go ahead. My subject will run. In fact, if I talk about that, you will get little confused and you'll ask me a lot of questions. My concept, my idea is here is not to please you people and then show it flowery and then run ahead. I have to address those things which are little ambiguous. You get that? Yes, that's the reason. Though I knew that you guys would hate me if I do that, but I'm not here to make you people love me. I'm here to help you people clear the exam. In the process of you clearing the exam, if you hate me, I'll be happy. I'll be more than happy. Don't worry. Next one, renewal of a bill. What exactly is renewal of a bill? Renewal of a bill means now it is due for payment today, but मेरे पास पैसा नहीं है. See, no pocket only. Yeah, I don't have money. What will I do? I'll say I'll pay after 1 month. I'll pay after 1 month. So what will we do? We'll write a new bill for 1 more month. That is renewal. Okay, what is this? Settlement after it is due. With respect to renewal, no, always you would have to sign a new bill. In the old bill, you cannot scratch and rewrite a date. This is not your bus ticket. What is it? You would have to draft a new bill. You get that? Then accommodation of a bill. What exactly is accommodation of a bill? Something very simple, guys. Now, I need money, you need money. Both of us don't have money. I need money, you need money, both of us don't have money. What will I do? I will raise a bill against you. You're like, hey, why the hell are you raising bill against me? We don't have any transaction. They say, just wait, chill, relax. I will raise a bill against you. You will sign it. You will sign it. You have accepted that. Now it will come to me. It will become bills receivable. Now I'll take this bill to the banker and then get it discounted. Now I'll have money and I'll give some money to you also. Example, I will raise a bill for rupees 100. I will raise a bill for rupees 100. You sign it and you give it to me. Actually, you need not pay me 100. I am not able to receive 100 rupees. I have not sold goods to you only 100 rupees for. Still I raise a bill. This is like bill. Just take it. Just like that. Fake bill. Yeah, we don't have any commercial transactions. Still I'll raise a bill against you. You will sign it, you'll give it to me. That 100 rupees bill, I'll take it to the banker, get it discounted. Banker will give me 90 rupees. Banker will give me 90. 10 rupees is discount. In that 90, I will keep 45 rupees, I'll give you 45 rupees. Both of us have kept 45. Now, on the maturity, banker will come to you and ask money, 100 rupees. So I will give you 50 rupees then. You will put 50 rupees from your pocket. Pay the bank 100 rupees. So what has happened? I got 45, you got 45. I paid 50, you paid 50. So technically, it is like loan taken from the bank. But if you straight away go to the bank and then ask money, banker will say get out. Or this is lunchtime, come later. Yeah. So they don't pay money. Why? There is no evidence or there is no backing to it. So what you do? You'll accommodate a bill on each other. You get that? That is accommodation of a bill. Yes. Did you guys understand accommodation? Then dishonoring. Honoring means it's like this. You are supposed to pay me money. I give you a bill. You sign it, you give it to me. I'll keep it with me. One fine day, I'll show that bill to you, you pay me money. Yeah, I will do you for to say Gana Satkara. I'll put one shawl on your shoulders, give you one bouquet, give you one fruit bowl, and then say congratulations, thank you, sir. Yeah, I'll do all that. That is what you say honoring. If in case that day when you're supposed to pay money, I'll come to you and you don't pay money. I will tear the shirt that you're wearing. To say I'll pull you from your hair, punch you on your face. That is dishonoring. You get that? I'm not. I won't do that. I'm a good boy, basically. Okay, but I'm just telling you, people do that. That is called as what? Dishonoring. Did you understand? Honoring means paying for the bill. Dishonoring means not paying the bill. You get that? You are taking the mana maride out for the bill. That's the one. Next one, bad debts. The money that they were supposed to pay but they don't pay is bad debts. The money that they were supposed to pay but they don't pay is bad debts. You get that? These topics we take it very much in detail. Yeah, you take hours just explaining the journal entries for each of the cases. Okay, that's in a regular batch. Now we're discussing revision course. Okay, so I've run through it like crazy. So come on, let us go now and then solve those two problems that I put. Aditya is saying like Harshad Mehta scam. Okay, come on, let us go ahead. So Mr. B accepted a bill. So if Mr. B has accepted a bill, oh wait, we need to see the accounting from the entries in the books of Mr. A. We should see from whose perspective? Mr. A's perspective. So Mr. B is our Mr. B is our debtor. Yeah, Mr. B has accepted. Mr. B has signed. So who did we raise? We raised it. We give it to him. He signs and he gives it back to me. So what is it to me? This bill is bills receivable. This bill is receivable to me. Why? Mr. B has accepted it, meaning he has signed it. So if he is signing, then I prepared it. If he only prepares, he only signs, it will become promissory note. Correct or not? So I have raised it, he has accepted it. So to me, it is bills receivable for rupees 10,000 drawn on him by Mr. A. Very good. On 1st of August 2017 for 3 months. So 1st of August is 3 months. August over. September, October, November. 1st of November 2017. Sir, 1st of November is holiday. Kannada Rajyotsava. Can I take? No. They will tell in the question it is holiday. Have they given in the question it is holiday? No. Then don't do anything. Then 1st of November 2017 over. Then add 3 days maturity. 2, 3, 4. So 4th of November 2017 will be the date on which the bill is maturing. Do you guys get that? Sir, 4th of November is Sunday. I remember that day is my marriage anniversary. Sorry, my parents' marriage anniversary. Don't go by your logic. Yeah, have they given in the question that 4th of November is Sunday? They have not given. So don't do any natak there. Just chill. This was for the amount which B owed A. Yeah, B owed us A. B owed us. So B is our asset. On the same date, Mr. A got the bill discounted from his bank. Okay, fine. We'll start writing journal entries. He didn't keep it till that date, guys. He got it discounted immediately. I have one question, guys. In tomorrow's class, should I be typing the answers like this or shall I put the answers also? Shall I put the answers also? And then just show this answer comes like this answer comes like this. Should I tell something like that? Oh, Tejas, very good question. I'll answer it, Tejas. Huh? Let me finish this. Now, come on. First transaction is on 1st of August 2017. 1st of August 2017. Okay, what exactly is the journal entry? We're receiving the bill. Bills receivable is an asset. Bills receivable account debit. 2. Who's paying us? Mr. B. Credit the giver of benefit. Yeah, you get that? He's giving us the benefit. Or in other way, he's supposed to pay us money, so we'll treat him as asset. He's our debtor. Debtor is our asset. This asset is reducing because he paid us money or because he paid us bill. Okay, what is the amount? 10,000. Every time I cough, no, my lungs are dancing. Okay, perfect. Come on. Let us go ahead. So 1st of August 2017 over. Then, oh, you guys are fine. I can put the answer and then, oh, yeah, I can do that. Yeah, I can do that. But I thought like, if I put the answer like, sir doesn't know answer. Chumma, whatever is there is telling that even I can do. Why should I sit in the class? I thought you guys will be of that opinion. Okay. On the same date, what is happening? You guys would have to write narration. I'm not typing it. You guys would have to write narration in the exam. Don't skip writing narration. So on the same date, bill is being discounted. When the bill is being discounted, banker would have to pay you money. Bank is an asset increasing or Bank is what? Bank is a personal account. Debit the, yeah, bank. How much money will banker give? 9,800. Next, so banker is giving us. So we are giving him what? Yeah, we are giving him bill. When we give him bill, 10,000 credit. Why? Bills receivable is an asset. It's going out. Credit what goes out. Bank account debit, because debit the receiver of benefit. Banker is receiving the benefit from us, 9,800 rupees. Then 200 rupees is our expense. Debit all expenses and losses. Or it is an expense. Expense increasing, debit. Expense increasing, debit. What will I write here? Discount charges. Yes, I hope this makes sense. Come on, let us go to the next one. What is happening after that? On the same date, Mr. A got the bill discounted for 9,800. On the due date, B approached A for renewal. Due date is what date? So what is the bill for? How many months is the bill for? 3 months. So if it is for 3 months, I'll write first of 8 over 9, 10, 11. 11 is November. 11, 11, 17. Yeah. 1, 11, 17 is asking for renewal. If he's asking for renewal, that means that the bill is dishonored. They have not mentioned the word bill is dishonored here, but obviously the bill is dishonored. When you say that you will pay later, that means that you are not paying now. So when you are not paying, first to whom will the Mr. B tell that you will not pay? First you would have to tell the banker. Banker would come to Mr. B for money. Mr. B tells, nah, nah, go, go, go. So what is happening? Banker would go to Mr. B. Mr. B will not pay money. What will the banker do? He will come to you and then throw the bill back to you. So this bill, what you give to the bank, banker will give back to you. Yes, how much? 10,000. Next up, you would have to pay banker because banker gave you that bill. 10,000. Have they given any noting charges? If they have given, I'll add it. No, they have not given any noting charges. 10,000. Then would you keep this bill with you? Would you keep this bill with you? No. You. Why would you keep this bill with you? See, banker didn't get money. He threw it back to you. It's not a love letter. No, oh my God, my first love letter. You will not keep it. You will throw it back on the face of Mr. B. So you will reverse this entry. See, now you reverse it this entry. This entry's reversal is here. Now this entry's reversal should be here. So I can write here Mr. B, because now you are giving the bill back to Mr. B. Mr. B has to pay you money. Mr. B will become your asset. Debt are increasing. Asset increasing, debit. And bills receivable what you had with you is now going out. So bills receivable is decreasing. What will be the amount? 10,000, 10,000. Okay. Instead of writing these two entries, people what they do is they cancel it out. See, bills receivable debit here, bills receivable credit here. So instead of writing these two, or you can write one input. You can write one simple entry. You can write one simple entry. So what is the entry that you will write? Instead of this, you will write Mr. B. Mr. B account debit to bank account. How much? 10,000. So you will ask, sir, what is the logic for this entry? It's very simple, guys. It's very simple. Now, on the maturity date, banker will go to Mr. B and Mr. B has to pay money. Mr. B has to pay money to the bank, but Mr. B doesn't pay. So you pay. So you are paying money, your bank balance is decreasing, bank account credit. Next thing, you are paying on behalf of Mr. B. So Mr. B has to pay you money, 10,000 debit. You guys get that? 10,000 debit, 10,000 credit. Mr. B account debit to bank account. In this sort of a question, they can give something called as noting charges. Banker has noted down, no, that that guy didn't pay money and banker has come back to you. So banker for this, they'll charge some money. Assume that the banker charges 100 rupees in this case. So here this entry will be for 10,100 in that case. Here also it will be for 10,100. Get that? So whenever noting charges are there, you pass on that expense to the drawer. Drawing. Perfect. Very important point is noting charges is like penalty. Noting charges is like fine. Now tell me who should bear the fine expense. Person who did the mistake should pay the fine. Person who did the mistake should pay the fine. Now this noting charges as is a penalty or fine for dishonor of the bill. So who's the reason for dishonoring of the bill? This guy, no, Mr. B. Mr. B. So whoever is responsible, whoever is responsible, whoever is the guy who did the mistake, you should pay the fine. So he pass it on to him, and that will be expense for Mr. B. For Mr. A, it is not expense. It is Mr. B's expense which Mr. A has paid. Done. Then, sir, we have to add grace days, right? They have told on the due date only this has happened, so I have taken like this only. Done. Okay, now this is a very important thing. I thought I'll tell this to you little later when we start average due date account current, because the question has come. I'll mention it here only. Okay, Gautam, listen. In the chapter of bill of exchange, due date and maturity date are different. We're treating them differently. But when you come down to the chapter of average due date account current, due date is equal to maturity date. There is no concept of 3 grace days only. What will we do? We'll always add 3 grace days and then take that date only as the date. In the question, they'll be mentioning due date, but actually they'll be writing maturity date. Have you thought of this before? In the question, they'll be writing due date, but actually they would add 3 grace days and then take usually. Am I right? Am I right? Am I right? Yeah. So only in the case of the days computation thing, you'll take it as like that. But anytime after that, always maturity date itself is the due date is how it will be considered. They will write due date in the heading, but they will be writing the maturity date. Done. Here, if you want, you can take 4th of November. No problem. No problem. That is not a big problem at all. Okay. Yes. I hope that doesn't bother you much. Someone is asking, is it mandatory to write narration? Yes, it is mandatory to write narration. Unless in the question they give very specifically, need not write narration. If they give like that, don't write. If they don't give, then you have to write. Okay. On the due date, Mr. B approached Mr. A for renewal of a bill. Mr. A agreed on a condition that 2000 rupees to be paid immediately, along with the interest on the remaining amount at 12% for 3 months. Now Mr. A is supposed to receive money. Mr. A is supposed to receive money. How much money is he supposed to receive? Whatever money he receives, I'll write cash account debit. Sir, can I write bank account debit? Yeah, you can. Okay. Or who's paying it? This is being paid by Mr. A. Sorry, Mr. B. Okay, how much is she paying? How much is Mr. B paying? Mr. B is paying 2000 plus interest. Now the question is, how much is interest? Interest. Now, how much is the money that she's supposed? How much is the money that B should pay? 10,000. How much is being paid immediately? 2,000. 8,000 is postponed. So on the 8,000, we'd have to compute interest. So 8,000 multiplied by, what is the rate of interest? 12% for 3 months. 12%. 3 by 12. Okay, come on, let us do that. 8,000 into 12% to 3 by 12. I end up getting 240 rupees. Do you get 240? Yes, yes. Akshay is asking, sir, will it be charged in bills receivable to bank? Yes, yes. There you would write it. You would include it. There is no separate entry also for that. Okay, 240. So can I write here 2000 plus 240? So much will be the amount? 2,240. Yeah, but Mr. B's liability will decrease only to the extent of 2000. That additional 240 rupees, whatever you're receiving, is your income. Income should be credited. So I'll write to interest account. That's an income. So income is created here. You guys get that? Next, what is happening to the balance amount? 8,000. I think she's giving a new bill. Sorry, he or she. I don't know why I'm saying C. Okay, might give a new bill. What is it? C. B should accept a new bill for 3 months. These arrangements were carried out. Okay, fine. So there is a new bill now coming. Same date. New bill. What is the new bill entry? Bills receivable. Who's giving it? Mr. B's account. How much is the new bill for? 8,000. When will this bill be settled? After 3 months. When will this bill be settled? After 3 months. So you'd have to receive 10,000 now. You receive 2,000 and 8,000 you're receiving new bill. For such delay, you receive 240 rupees interest, which is your income. Now, this bill is due after 3 months. November over. Okay. December, January, February. February 1st, you're supposed to receive money. What happened? See here. for the 3 months. These arrangements were carried. So on 31st of December, B became insolvent. On 31st of December, what happened? B became insolvent. Sir, what do you mean by insolvent? It's like this. Whenever people become insolvent, they jump into the water and they will not dissolve. So when they don't dissolve, they are called insolvent. Example, our Siddharth from Coffee Day, he wanted to check whether he's solvent or insolvent. He jumped into the river and it didn't dissolve. When it didn't dissolve, it was considered, oh, this guy is insolvent. Is it like that? Insolvent means your assets are not sufficient to pay your liabilities. Insolvent means your assets are not sufficient to pay your liabilities. Gautam is saying again, sir, can we take 4th of November? Yes, you can take 4th of November. For these all these three transactions, for all of these three transactions, you can take 4th of November. Sir, why did you not take? Because in the question they've told on the due date. I'm going by the literal statement in the question and taking it as 1st of November. In the suggested answers, if they've taken 4th of November, it is still correct. It is okay, guys. It is a little interpretation difference. But I'm going by the literal words in the question. You get that? And it's not been taken that seriously. Date is not that serious. Okay, you guys can chill here. Okay, now 31st of December, she became insolvent. When she became insolvent, firstly, you will not receive money. Firstly, it is a bills dishonored. When it is bill dishonored, I would have to reverse this entry. I would have to reverse this entry. What is the entry here? Bills receivable to Mr. B. So what will I write here? Mr. B. Debit to bills receivable account. You guys get that? So Mr. B's account debit to bills receivable account. What is the amount? Amount is 8,000. That's not an issue. Then what do you have after that? These arrangements were carried. B became insolvent and his estate paid 40%. Meaning after you sell all his assets, you got 40% of the money. How much are you supposed to receive? 8,000. Now you received 40%. You receive 40%. So 40% I can rate cash account or bank account debit. If it comes by way of cash, I'll rate cash account. If it comes by way of check, I'll rate bank account. Yeah. How much? How much will you receive? 40%. 8,000. 40%. You get that? So how much is 8,000 into 40%? It will come to 3,200. You receive 3,200 rupees. You receive 3,200 rupees. But actually speaking, how much are you supposed to receive from B? That's it. No, he's insolvent. He will not pay you any money after this. So Mr. B's account is completely to be closed. Mr. B was supposed to pay you 8,000. You received only 3,200. So what is the difference? The difference will be 8,000 minus 3,200. You guys get that? So how much do you get? 4,800. That 4,800 you won't receive. When you don't receive, it becomes bad debts. What is bad debt? Simple. There is a debtor. There is a debtor. Debtor is a person who owes you money. Okay. If till the time he is supposed to pay you money and he says, yeah, I need to pay, I remember I'll pay, he's a good debtor. The day he says, I will not pay, he's a bad debtor. The day he says that he will not pay becomes a bad debtor. Bad debtor is a debtor who doesn't pay money. Someone asked me some time ago, sir, what is the difference between bad debt and dishonor? Dishonoring of a bill might lead to bad debts. Bad debts means a person is a debtor who doesn't pay money. Dishonoring is a bill against which the person didn't pay money. Against a bill, if the person doesn't pay money, it is called dishonor. And after it being added to his debtor's account, if he doesn't pay even after that, he becomes a bad debt. Bad debt is an expense and it will be transferred to P&L account. Get that? So that's it. We're done with this. You guys want to copy this quickly? Okay. If you want to take a quick screenshot or copying, I'll leave this here for 2-3 seconds. Shall I take you to the next question on bills of exchange? Shall I? Okay, come on guys. Now let us go to the separate. Next, another question. Okay. Prepare journal entries for the following transactions in the Katrax book. This is one of the very nice questions that we can find in bills of exchange. Yeah, very nice question, we can say. Question number 13. Again, would have to pass journal entries in the books of Katrak. books of Mr. Katrak. Oh, Harshit Kambanda is laughing. Ha 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 ha. Was it because of that insolvency joke? Hmm. Then I'll crack it in my next stand-up show. Okay, let us do this. Pass necessary journal entries for the following transaction in K. Katrak's book. Okay. So they have given 1, 2, 3. We'll also do 1, 2, 3. There is no date column here. So chill. Yeah. First one. What is the first one about? Katrak's accept. Hey, we are Katrak, okay, guys. We should see everything from Katrak's perspective. Yeah. From the next one, I'll do that. Okay, Varshita. Okay, so what is it that we do? So Katrak's acceptance to Basu for rupees 2,500 discharged by way cash payment. So what exactly are we doing here? So Katrak, it's an Katrak's acceptance to Basu. So for us, it is a bills payable. Who's accepting? Katrak is accepting. So it is bills payable. What is it to us? Bills payable. If it is a bills payable to us, what we would have to do? We'd have to credit it. Okay, for rupees 2,500 discharged by cash payment of rupees 1,000 and a new bill acceptance for the balance plus 50 rupees interest. So we were supposed to pay money 2,500, but we couldn't. So what are we doing? We are making a part payment and we're going for renewal of a bill. Okay, so what is the thing happening? We are paying cash. How much cash are we paying? 1,000 and a new bill for the balance. Okay, wait. What is that we're doing? Firstly, we're paying cash. So I'll write to cash. How much cash are we paying? We're paying cash of 1,000 cash we paid. Okay, perfect. Other than paying 1,000 rupees cash, what else are we doing? 2,500 rupees was the bill. 1,000 rupees paid. So 1,500 rupees plus interest. We're giving a new bill. Bills payable account. This is for 1,500 plus 50 rupees interest. Okay. So how much is that new bill for? 1,550. I'm giving a new bill for 1,550. All this to Mr. Basu. All this to Mr. Basu, to whom I'm supposed to pay money. So Mr. Basu account will be debited by debit the receiver of benefit. Okay, Mr. Basu account will be how much? 2,500. 2,500. Now, what will be the difference? This difference is 50 rupees. What is this difference of 50? 50 is expense to you, interest. The difference of 50, that is your expense. Yes. Difference of 50, that is your expense. So this is the entry for the first one. Come on, let's go to the second one. What is the second one? G Gupta's acceptance. So it is acceptance to G Gupta. What is it to you? It is to you, it is bills receivable. To you, it is bills receivable. 4,000, which was endorsed by Katrak to Mehta. So you received a bill from Gupta, you gave it to Mehta. You received a bill from Gupta, you paid it to Mehta. Was dishonored. It was dishonored. So what will happen? That was a bill received from Gupta, given to Mehta. So Mehta will return that bill to you. When Mehta returns that bill to you, you will receive the bill back from Mehta. So you'll write bills receivable account debit to Mehta account. You are supposed to pay Mehta. How much is this? 4,000 plus noting charges 20. So we'll write the entry for 4,020. After that, this bill you will not keep it with you. What will you do? You will give it back to Gupta. So we'll write Gupta account debit to, you will not keep it with you. You will write bills. You are passing on that bill. Someone was asking previously, sir, noting charges will be added in that entry. Say here only. We will not write the 20 separately also. Why? It is the expense to Gupta. Gupta will take care. We don't count it separately. For us, it is just that we need to receive so much money. So I'll write 4,020. That's how we write it. But why won't we be deceiving bills payable? I didn't understand. Aditya will just write as interest. Just write as interest. That would do. That would do. Yeah. Now, instead of writing these two entries, you can write only one entry. You can write one simple entry. What is one simple entry? Find what is the common part in that. A lot of them, what they do is, see, in the exam, in the ICA suggested answers also, they have not done it this way. There is bills receivable debit here. There is bills receivable credit here. That is eliminated. Straight away, they wrote what? They wrote Gupta. debit to Mehta account. Amount will be 4020. Now you're wondering, sir, what is the logic of this Gupta account debit to Mehta account entry? Simple. Gupta was supposed to pay you money. Instead of that, Gupta gave you a bill. You pass that bill to Mehta. So Gupta account reduced, Mehta account reduced. Gupta is your asset, Mehta is your liability. Now when Mehta went to Gupta, Gupta denied to pay money. So what is happening? Now Gupta has to pay money to Mehta. Gupta has to pay money to Mehta. So Gupta account debit, Mehta account credit. Asset increasing, Gupta account increasing because Gupta has to pay his money. Mehta account increasing because we need to pay that money to Mehta. So technically we would have to collect money from Gupta and then pay it to Mehta because previously we gave the bill what Gupta gave us to Mehta, but Mehta didn't receive money from Gupta. So he gave that bill back to us, we gave it back to Gupta. So we would have to collect cash from Gupta and then give it to Mehta. So the journal entry will be Gupta account debit to Mehta account. Does that make sense? Oh, someone is asking, sir, shouldn't we be debiting? Okay, you are right. You are right, Siddhant. You are telling that we should write bills payable account debit to Basu account. That is the journal entry for dishonoring. Here, they have not asked the journal entry for dishonoring. They have given a specific transaction. After the bill is being dishonored, partly money is settled now and the other part is being renewed. You will write entry only for that cash payment and renewal of a bill. We are not writing entry for what do you say? Uh, dishonoring. In this case, that way, I can write lot of entries. Firstly, when I received bill from Gupta, endorsement to Mehta, have I written those entries? No. We'll write only from where they've given in the transaction. You guys get that? We're writing entries only from where they've asked us, not before ka entries. Next, D. Dalal, okay, retires a bill. Fine. He retires a bill for rupees 2000 drawn on him. So who has drawn? We have drawn. On whom? On him. So what is this bill to us? This is bills receivable. We have drawn this bill in his name. Mr. Dalal, you agree. I order you to pay. I unconditionally order you to pay rupees 2000. I had drawn it. He has accepted it. It is drawn on him. Means it is drawn in his name. In a bill, no. Only that drawee's name will be there. Drawer's name will not be there. When I draw a bill, I'll write Mr. Dalal. I unconditionally order you to pay 2000. He signs and then gives it back to me. That is bills receivable. Drawn in by Katrak. I have drawn it. For rupees 2000 rupees there and he retires it for 10 rupees discount. Now assume that this bill is supposed to be settled in January. Now Mr. Dalal has made lot of money in the stock market because it's on the all-time high. So Mr. Dalal has lot of money now. So Dalal says, I don't want to keep this money as due for next year. I'll pay it right now. You take it right now. I'll say, okay, boss, you pay it right now. So what is happening? He's paying it to me. So cash account debit or bank account debit. But because he's paying early, I'm giving him discount 10 rupees. This discount is my expense. So journal entry will be bank or cash account debit 1990, discount account debit 10, to bills receivable account 2000. I'm sure. Sir, will we write Dalal account anywhere? Nowhere you will write. When money is coming, no. You don't really care from whom it's coming. Sir, can I write bank account here? Yeah, beta, you can write. How much? 1990. Sir, what about the 10 rupees? Discount. Sir, why is it not income? We are giving discount. Why are we giving discount, sir? Because he is retiring the bill. Means what, sir? He's supposed to pay money late. He's paying it early. So when he pays early, we give him like, okay, I'm happy because you're paying early. You also celebrate with your kids. So you give him. Sir, what do we credit? Bills receivable. Sir, why? Bills receivable is an asset. It was there with us. We would be holding till next month or sometime. But he wants it right now. He will collect that bill, he'll tear it and he'll pay me 1990 rupees. Get that? So this is the entry. For these entries also you have to write narration. Narration is not something big. Whatever is there here, same thing you will write as narration. That question, whatever is there, no transaction. Same thing you write as narration. Sir, should we write narration? Yes, you should. Can I skip it? They will also skip the marks. Yeah, pass narration. Yeah, you need not write discount alone. You need not write discount. Just write discount. Chalega. Chalega, chalega. Okay, so we're done with this question also. So I have successfully completed both the questions on bills receivable. Yeah, there can be a lot of other questions on bills receivable. You guys try it at your own. Okay, I just did the basic ones. Yeah, come on. Shall we go to the next one, guys? Sale of goods on return or approval basis. Unit 2 of our special transactions chapter. Shall we start? Shall we start? Give me a thumbs up. Mm-hmm. Mm-hmm. Mhm. Give me thumbs up. Give me thumbs up. Give me a head start. Shall we start? Unit 2. Sale of goods on approval or return basis. What can you expect? They can ask you either to prepare journal entries or a multi-column ledger for goods and on return or approval basis. Yeah. One of the exams they'd ask for multi-column ledger, and they can ask, or they can also ask, sir, what is the last entry? Last transaction. What is the last transaction? What is the last transaction? We skip last one. Oh, sorry guys, not intentional. It is not like I don't know that or that is difficult and I'm skipping. Completely not intentional. Okay. Sorry, sorry. Should I do Baski? You tell me how many squats should I do? I'll do. Katrak's acceptance to Patel. So Katrak has accepted. Katrak's acceptance. So what is it? Bills payable to Patel. Rupees 5,000 discharged by Patel. Okay. So Katrak's acceptance to Patel 5,000 was discharged by Patel Modi's acceptance. Oh, ho, 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 ho. See, you are supposed to pay money 5,000 to Patel. You know what did you do? It is not like bills payable. What did you do is you gave one bill which Mr. Modi gave. There's one more guy called Patel Modi. Patel Modi is a person who's supposed to pay you money. See, assume that. Okay, we'll ignore this word Patel. Only concentrate on the word Modi. There is two Patels. You get confused here. Okay, I am K here. Okay, there is M here. There is P here. Okay, now I am supposed to pay money to Patel. What I do is Modi gives me a bills receivable. This bills receivable, I'm passing it on to Patel. So what am I doing? What am I doing? Endorsing. What am I doing? Endorsing. Okay. Yeah. Moody's acceptance to Katrak for a similar amount. Yeah, what are we doing? We're passing on the bill. So I can write the journal entry. For accepting the bill from Modi, the journal entry will be bills receivable account debit to Moody's account. Then when I pass it on to Patel, it will become Patel account debit to bills receivable account. Patel account debit to bills receivable account. Am I right? So what will be the entry? What will be the entry? Patel's account debit. Bills receivable account. 5,000. Patel account debit to bills receivable account 5,000. This is my entry. I hope this makes sense. Yes, Tejas, it's an error of omission by me. But error of omission can be corrected, no? Yeah, all errors can be rectified. But in order to rectify, you would have to accept the errors. You get that? So errors are rectifiable, but the big heart lies in accepting them. You might not see my big heart, but I do have one. Okay, you tell me if I do something wrong, I'll accept. I'm a good person that way. Okay. Let's go to next one. We were discussing sale of goods on approval or return basis. This is an amazing concept. This is an amazing concept. I'll tell you an example. I was telling you this yesterday. I'm writing a book on what to say stories like 30 days left for the exam. How should your attitude be for the examination? So what will I do? I'm writing a book wherein every day there's a small story and small moral from that story. If you read that story and if you read that moral, that will boost you up and it will get your attitude right for the exam. So for 30 days, 30 stories. So this book you start reading it 1 month before the exam and then you read it every day 1 minute. You will not read the entire thing in one go. Every day, 5 minutes, 6 minutes, you'll spend and read one story. So that's how the book. Once I write this book, I want to sell it. What will I do? I will go to Sapna Bukos. I'll go to Sapna Bukos. You know Sapna Bukos? I'll go to Sapna Bukos and then say, Uncle, I've written one book I want to sell. That uncle will say, Are you Chetan Bhagat? I'll say, No. He'll say, Get lost. You get that? Say, I'm not a very published author. I'm not a renowned author. So they would not agree. They would not buy books from me. What will I do? I'll say, Uncle, give me one rack in your book house. I will keep my books. I will keep my books. I'll keep 100 copies of the books here. You don't pay me any money. You don't pay me any money. I will give 1 week time. 1 week time I'll wait. At the end of 1 week, if you sell it, you give me money. If you don't sell it, give the goods back to me. What little? At the end of 1 week, if you sell the goods, if you sell the books, give me money. If you don't sell the books, you return the books to me. You return the books to me. That's what I did. So that's sale of goods on approval or return basis. I give the goods to him. It is not sale. When I give the goods to him, is it sale? No. When I keep the books in Sapna Books, is it sale to me? It is not. It is left for his approval. He has to approve it. He has to approve it. Now assume that he doesn't sell. He doesn't sell. But he says, okay, fine. I will sell this 100 copies. You take this money and then get lost. Don't show me your face again. If it tells that, if it because I look cute, if it tells that, yeah, then what will happen? It is approved. Approved. If he says I 1 week also not over, 3 days is over. He says okay, nobody is even seeing these books. ಯಾರು ಮೂಸು ನೋಡ್ತಾ ಇಲ್ಲ, take these books and go away. He's returning it. He's returning it. You get that? Or in 2 days only all the books are sold. He'll call me and then say, Sir, can you give me 100 more copies because all the books are sold out? If he tells that, again I'll give the books. Then we might enter into normal sale transaction. Then he might buy books from me and then sell because I'm in a commanding position now. I will say, I am selling. I want money right now. When in fact, you give me advance, then I'll give you books. I can start doing that. Why? There is a demand created now for the books that I write. You get that? So that's another way of doing things. So that sale of goods on return or approval basis. This is the concept. I hope you got this concept. So when we give the goods to them, is it sale? It is actually not sale. When you give the goods to them, is it sale? It is not sale. When they accept it, it becomes sale because they have an option to return those goods. You get that? So that's an important point. Okay. No, I'm like dabbing, dab. Okay. And they can ask one more thing: multi-column ledger. Multi-column ledger means it's not like ledger account guys. It'll have date particulars. It'll have the due date concept. Then it'll have goods sent, goods returned, goods accepted, balance. It'll have columns like goods sent, goods returned, goods accepted, balance. Like 10,000 sent, 5,000 accepted, 2,000 returned, 3,000 neither accepted nor returned, balance. You'd have to just write it there. Yeah, that's a very simple thing. Very, very simple thing. This is a very easy chapter. And very rarely they ask a separate question on this chapter. Very rarely they ask a separate question. Sir, does that mean I can skip this chapter? No, look at the glow on your face when someone says you can skip something. This is not a chapter that you should skip. The reason is the chapter has 15 to 20% weightage for entire chapter 6. Yeah, which includes 4 other units. But as per the previous observation, maximum 6 marks. Not every exam they've asked this question. In fact, no, there is something that ICI will release called as RTP, revision test paper. Heard of? Heard of RTP? For every exam they release RTP. In couple of RTP, there'll be one question on every chapter. One question on theoretical framework, one question of rectification of errors, one on BRS, one on inventory, one on consignment, one on bills of exchange, company accounts, final accounts, partnership. Every chapter there'll be one question. In fact, ICI has ignored this chapter in RTP also. Couple of times they didn't give question on sale of goods only in the RTP. So that is the plight of this chapter. You get that? And I hope you people have done November 2020 RTP. Yeah, if you have not done, please do that. Please do November 2020 RTP. In fact, I've discussed in detail. In detail, I've discussed 6 hours discussion is there. RTP November 2020. Yeah, search for it. You will get it. Okay, 6 every 1 hour 6 videos are there. Separate 6 videos of 1 hour each. Every RTP and RTP have not just solved the question. I've discussed the entire concept behind that and then solved it. So do RTP. What I was trying to tell is this chapter has been taken so lightly that ICI has not given question on sale of goods on approval basis or return basis in RTP also. You get that? Then what do we do? Then what do we do? Shall we skip this chapter? No, not. Why? Because read this note. Rather than a separate question, this topic can be included in a question on valuation of inventory. Now, yesterday, when you did the question on valuation of inventory, in that chapter, this was included inside. So, this question, or say questions on sale of goods on approval or return basis, will be included in valuation of inventory. So, if you skip this topic, you can't do that topic. If you skip this topic, you can't do that topic. So, it's connected. It's better you do this. Okay. Oh, Pawan. Yeah. You are right, Pawan. I'm a great fan of his efforts and hard work. The way he's taken himself up from nowhere to everywhere. Yeah. Yeah. Rather than a separate question, it will be part of valuation of inventory question, or it can be part of final accounts question also. But I'm not sure if you have done those questions where final accounts question has adjustment of goods sent on return or approval basis. But there can be question in final accounts chapter which includes this goods sent on return or approval basis adjustment in it. Done. So that's with respect. So if you would, so you would lose on the other chapter too if you decide to skip this chapter. Don't do skipping. Yeah. And people are telling, man, whenever I tell something, you're like, okay, sir, you're trying to scare us by saying this. No, I'm not trying to scare you. My hobbies are not scaring people. My hobbies are basically making people laugh, smiling, traveling, sitting, writing, all this, reading. I don't scare people. No, why do I look like that? No, please don't judge me. Okay, what are the important topics? The basic understanding, concepts of goods sent on return or approval. Basic understanding is very important. Why? You should know the concept of goods sent on return or approval. It is tested in a lot of other topics. Then journal entries. You would have to learn journal entries. If it is recorded as sale when the goods are sent. If it is not recorded as sale when the goods are sent. What is it? If it is recorded as sale, if it is not recorded as sale when the goods are when you send the goods, is it sale? It is not sale. So you will not record it as sale. So when do you record it as sale? When he approves. Now I've given the goods to him. When I give the goods to him, it is only mere transfer of possession. It is not sale. It becomes sale when he approves it. Or at the end of the term. I told in my example, 1 week. After 1 week, uncle doesn't return goods. Swapna Buko's uncle no, that Swapna doesn't return goods to me. Doesn't return books to me. So what will I assume? It is sold. They would have to pay me money. You get that? So when I give the goods, should I treat it as sale? No, I will not treat it as sale. When they accept, I'll record the sale entry. If they return, I will not write any entry. Why? When I gave the goods to him, I didn't write entry. When they return to me, I will not write any entry. However, when I give the goods to him, when I give the goods to them, if I write the sale entry, when they return the goods to me, I should write the reversal entry. It is not sales return. Why? In the first place, it is not sales. You will not write sales return to debtors. You will write sales debit to debtors. You will write sales account debit to debtors. It's a little tricky. I have given the journal entries also for this topic. Don't worry, I will discuss it. Done. If the goods are accepted, you will not write any entry. Why? Because already you returned the entry when the goods were sent. I will discuss it Nietzsche. Just wait for some time. And year-end adjustment. Yeah, the goods are with them. But I told you, you are still the owner. They are the owner only when they accept it. So goods are sent on return or approval basis. It is not yet been accepted by them. Year-end comes. When you count your physical inventory, in your physical inventory, those goods are not there. But those goods still belong to you. I yesterday asked you to add it. That is the year-end adjustment. Yes, when we added, we did it at cost. Same thing. If you want, you can write one journal entry also to it. Inventory lying with customer account debit to trading account. Actually, it is not a very sound, correct journal entry, but if you still have to write, you can write it. Yeah. What happened, Neeraj Kumar? Ayyo, you're telling. Yeah. Then preparation of multi-column ledger also can be questioned in the exam. Okay. Next. Okay. Now, come on. Goods sent on return or approval basis. 3 ways. 1. There are only few transactions. There are only few. Stage 2. How many? There are only few stage 2. Okay. There are many transactions. Many transactions. And there are too many transactions. All the 3 possible scenarios are there. Few transactions, many transactions, too many transactions. How to deal in case of each of these? Shall we discuss that? First one. When the goods are few, transactions are few, you can either record sales when the goods are sent or not record it as sales when the goods are sent. You can either record the goods are sold when it is sent or you can either skip. Now, what do we do in each of the cases? Concentrate. When the SR, you didn't discuss this right side too. I will come back. Chill. Samadhana. Why? ದಾನಗಳಲ್ಲಿ ಅತಿ ಉತ್ತಮ ದಾನ ಸಮಾಧಾನ. रुको जरा, सबर करो. I'll come back to that. When transactions are few, when the goods are sent, then they're treated as actual sales. What do? We write debtors account debit to sales account. At the time of receipt of approval, when they approve, we will not write any entry. Why? Already we've recorded sale, no? Debtors to sale. Yeah, if they return, we will reverse that entry. Lot of them will write here sales return account debit to debtors account. It is not sold. If it is sold and they return, it is sales return. It is not sold only. You gave them notebook Kodi. They didn't like it. They gave it back. It is reversal of the sales entry. It is not sales return. Very important. It is not sales return. It is not. Is it sales return? No, it is not sales return. Is it sales return? No, it is not sales return. It is reversal of the earlier sales entry. I repeat, it is reversal of the earlier sales entry. Sales entry is debtor to sales, reversal is sales account debit to debtors. Okay. Now, at the end of the year, goods are sent, but no approval is received. It is not sold. Then you would have to reverse this. Illi reverse madbeku. If they reject, even if they don't reject, you would have to reverse it. Why? If you don't reverse it, no, it is like sales. It is there in your trading account sales. You would have to recognize profit, but it is not sold. How can you write something as sold when it is not sold? Yeah, how can you call someone as your girlfriend when you have not even spoken to her? No, not possible. Rejected. If it is rejected, also you need to reverse. If you have not yet spoken, also you need to reverse. Yeah, you need to come out of your assumptions. Yeah, what will do? You will reverse it. Debtor to sales will be reversed as sales to debtors. But not just there. You cannot stop there. You would have to further do what? Stock lying with the customer should be added to our stock at cost. Very important. Stock lying with the customer should be added to our stock at cost. We did this in valuation of inventories chapter yesterday. If you want a journal entry for this, I can give. What is the journal entry? Stock with customer account debit to trading account. So what is the journal entry? No, no, no. You cannot write sales return beta. It is sales return only when they have accepted sale. Oh, I say that told alternatively it is possible. Yeah, alternatively it is possible. That doesn't mean that you always take it. Now you tell me, is it sales at the first place? It is not the sales at first place. So you cannot write sales return. You would have to write it as sales account only. If you write it as sales return, you would have to write sales return on goods sent on return or approval basis. You would have to write it completely. Yeah, they've told alternative. They've told alternative. That's not the what to say only way of doing it. You get that? Don't be so harsh on me, please. Small boy. My mommy's only son. Huh? Yeah, stock lying with the customer should you be added to our stock at cost. Okay. Okay, fine. You do it that way. No, you do it that way. I don't want to contradict. I don't want to contradict. I will clean it. Your clarity is more important to me. You do it that way. You do it that way. Okay. Next, goods sent on return or approval are not treated as sales. So when they are not treated as sales, you didn't write any entry at the time of sending the goods. Did you write any entry? No, you didn't write any entry. Okay. Now, actually, again, you people have started. See, both are correct. You can write sales and you can write this. But if you ask me, my personal opinion with my accounting knowledge, I will tell you, you should not write sales return. You should write it as sales because it is not sales at the first place. It is not sales at the first place. You get that? I say also tells no. Alternatively, can be treated as sales return. So I'm not telling you sales return you should never write. If you ask me, I'll tell you should write sales account debit. If you want to write sales return account debit, you write it. Am I going to stop you? Now you're writing this in the exam. Will I come hold your pen and then say, no, no, you can't write? Will I tell that? No. At the end of the day, you write. You write. You write. You write it. Yeah. I will not hate you. I will not block you on your Instagram account because you wrote sales return account. I am not that crude a person. I'm like, okay, guys, you write it. Fine. I'm cool. I'm chill with it. And goods sent on approval or not treated as sales at the first place. So at the time of approval, we would have to write it as sales. If you observe, no previous case, what we did was initially when they were recorded as sales, here they wouldn't write entry. See here, initially only you wrote as sales entry. Then at the time of receipt, no entry. Why? Previously not entered. Here, at the time of sending, you didn't write entry. So at the time of acceptance, you should write entry. At the time of sending, you didn't write entry. So when they accept it, you need to write the entry. At the time of rejection, you need not write any entry. You need not write any entry. Why? Because those entries are not been made as sale only, no, before. So no need of reversal. I would tell you, my personal choice would always be this one. You should not treat it as sales. You should not treat it as sales. Why? It is not sales. It is not sales. It is sales only when they approve. You get that? Huh. Sir, is it only this much? No. One more thing you guys forgot. At the end of the year, we'd have to include it no, in our stock. Huh? How can you forget that? Have a look. At the end of the year, for goods sent on return or approval basis, received no entry. If it is no approval received, but stock lying with the customers to be added to our stock at cost. Yeah, at cost. You remember that entries, adjustment and all I taught you yesterday, valuation of inventory. It should happen at cost. Yes. Yes. Oh, Charan, I'm awesome. So are you. All of us are awesome. Very good. Yes. Arvind is saying, sir, are both sales and sales return right? Yeah, alternative treatment sales return is okay. But logically speaking, it is not sales at the first place. If it is not sales only, how can you write it sales return? Now, Aditya, what is happening is, I'll go back to book example. Okay, Arvind, I'll go back to book example. I'll give you books to sell it to someone. I'll give you books to sell it to someone. You are not buying books from me to sell it to someone. You are selling the books on my behalf. I can't go to every place and then sell, no? So I'll give the books to you, you will sell. If you sell, you will give me money. You will keep some money for yourself, you will give me some money. If you don't sell, you return the books to me. So in the first place, when I give you the books, it is not sale only. Because there is 100% probability of books coming back to me. So what is it? It is not sale at the first place. So when you return it, how can I call it sales return? But at the first place, if you call it as sale, they will call it as sale. I'm telling you, at first place, it is not sale only. Goods sent on consignment is not sale. Goods sent on return or police, it is not sale. It is goods sent. Goods sent, not goods sold. Should go with the spirit of it. You guys get that? It is goods sent, not goods sold. Okay, guys, come on. Let us go to the next one. What is it? We'll do a couple of problems on this. We'll do a couple of problems. Or, can I skip doing this? Or should I do them? I am asking you guys. Little less probable types. Okay, fine, I'll do it. Oh, can you give the break? Charan, I know why you told, sir, you are just awesome previously. If you tell you are just awesome previously, now if you ask break, I'll be having soft corner to Charan. And I'll tell, yes, Charan, we'll take break. Ayyo. No, nothing like that. I know, Charan, you're a good boy from heart. Yeah, you're asking, what to say, break, not because of your bad heart. You are a good hearted person, but your stomach is like kuchu kuchu something. Rats and all is dancing in your stomach. I understand. Yeah, substance over form. Yes. Yeah, substance wise, it's like transferred, it's like sold. But technically, if you see reality, it is not sold. You get that? Yes. Oh, skip. Hey, shall I solve? Shall I solve? Or should I skip? Shall I solve or should I skip? Shall I solve or should I skip? You guys are sending hand sanitizer picture now. What time do we take break? 8, 9, 10. We'll take it after 10. We will take it after 15 minutes. So this 15 minutes, shall I solve this and then we take break? Then we have consignment. This 15 minutes, shall I solve this and then we'll take break? Not required to solve. Huh? Are you guys sure? Or what I'll do is, this question is being showed to you guys, isn't it? So have a look at this question. Have a look at this question. I'll take a break. We'll take a break. Solve one. Solve. Yeah. Yes. I will solve. Fine. Okay, you need not tell me so many times. I'll solve. See, even if one person in the class wants me to solve, I'll solve it. Question 16. Okay, we'll do it. We'll do it fast. Okay, fast. We'll do these two questions and then we'll take break. Okay, perfect, guys. Okay, on 31st of December 2018, goods sold at a sale price of 3,000 were lying with customer. Okay, we have sent it on return or approval basis. It's lying with customer Ritu, to whom these goods were sold on sale or return basis. Okay, and they were recorded as actual sales. So they have recorded as actual sales. So what do we do? When they've already recorded as actual sales, now if Ritu approves, will we write any entry? No. On approval, there will be no entry. Why? On transfer only, we return sales entry. I'll repeat. See, it is already recorded as actual sales. It is already recorded as actual sales. Now, when Ritu accepts these goods, when Ritu approves, will we write any entry? No entry on approval because already recorded as sale. If Ritu returns the goods, we would have to write the entry. Now, Jyoti is asking, at the time of rejection, no entry will be passed, sir. Can you explain again? Yes. Okay. Jyoti, I'll tell you. At the time of sending the goods, if you have passed entry, at the time of rejection, you will pass entry. At the time of sending the goods, if you have not passed an entry, at the time of rejection of goods, you will not pass an entry. You get that? Now simple. On acceptance, if the entry is made, on rejection, entry will be made. On acceptance, entry is not made. On rejection, entry is also not made. When you send the goods, no, I'm giving something to you. If I give something to you, I've made note, okay. I have given one calculator to Jyoti. I've written it in my book. Now, if you return this, I need to make one more entry. I've received one calculator from Jyoti. I need to write. When I gave the calculator to you, no, Jyoti, I didn't write anything in my book. I didn't write anything. When you give it back to me, should I write? No. Why? When I gave it to you, I didn't write. When you return it to me, I need not write. When I gave it to you, I already wrote it. When you return it, I should write. You get that? If I give, if I write when I give, I should write when I receive back also. If I don't write when I give it to you, I need not write when I receive it back from you. Did you understand, Jyoti? Yeah. Yes. Okay, I think that's done. Sir, give break and copy answer. You people are great fans of copying the answer. Okay. Since no consent has, see, every question is there in the material. In fact, no, the probability of the questions which come from non-ICA publication for ICA exam is very less. Still, no, the passing percentage of CA foundation is less. Still, no one has scored 100 on 100 in CA foundation accounts. Why? Every question is there in material. ICA material, it's there, RTP may there, MTP may there. All questions are covered in issues material also. Everything is covered in class also. Still, people fail in CA foundation. Still, People don't get 100 in CA foundation. Why? It is there in the material. It's there only there. It's not there here. That's the problem. You get that? Okay, now, since no consent has been received from Ritu, you are required to pass adjustment entry, presuming that goods were sent on return or approval basis at a profit of cost plus 20%. So, cost plus 20. 1 by 20% is how much? 1 by 5 on cost. So, once it is sold, what will be there? 1 by 5 plus 1. That is 1 by x on sales. So, on the sales, how much is it? 1 by 6. So, how much is the value? 3000. I will not do it completely. I'll do it quickly. Okay, concentrate. 3000. Yeah, less profit. How much is it profit? 3000 divided by into 1 by 6. 3000 into 1 by 6. 500. 500. 500. This is what selling price of goods sold. Okay, how much? Hey, when I told that it is not like disappointing you people, I'm just telling you. ಹಾಗೆ ಅಷ್ಟೇ ಬೇಜಾರು ಮಾಡ್ಕೊಂಬಿಡಿ that why still people fail. It is because of their fail. But you are all good people. All of you will pass. Guys, please score 100. 100, 100, 100. When we made the entry, the goods center after approving, then only 20. Yeah, Charan. Even I didn't score. Yeah, even I, Neeraj, I am not a superhuman being. Even I didn't score. See, just because I haven't done doesn't mean that you also don't do. I'm a bad boy. You are also a bad boy. Huh? What is the reason why you are a bad boy? Because I was bad boy. You get that? I am not trying to tell you that I'm a master and I'm a superman and I'm a he-man. I'm trying to tell you that now if I write an exam, I'll score 100 in accounts. Now if I write an exam, I'll score 100 in accounts, not in quantitative aptitude, economics, law, accounts, even I'll score 100. Yeah, in fact, last batch, November 2019 question paper, I solved the entire question paper in less than 3 hours in the class. Question is 124 marks, question paper. I solved the paper for entire 124 marks, entire in less than 3 hours. I didn't skip any journal entry. I didn't skip any narration. I didn't skip any working note. I did all the working notes. I didn't write the answer. I explained the answer. The video is there on the YouTube channel. You guys can find it and then watch it. Entire thing in less than 3 hours. So now I can do it, but I couldn't do then. So amount of efforts that I'm putting in now as a teacher, if I would have put in same amount for every subject when I was a student, even I would have done better. Yes. Okay, 2500. What is this? This is the cost of the goods. This we need to include in our closing stock. But what is happening? They give you a little more information. Present market price is 10% less than the cost price. So market price is what? Cost minus 10%. Cost minus 10%. How much is that? L rate is equal to 2500 minus 10%. That gives me how much? Yeah. I'll write straight away. 250 I'll subtract. How much do I get? 2250. I'll get. Now, according to accounting standard 2, para 5. What does it say? Inventory to be valued at cost or NRV, whichever is less. Okay, this market price is nothing but NRV. This market price is nothing but NRV. So what do we record? So what is it? Value of goods to be included in stock. Stock is 2250 rupees. The value of stock to be included in stock is 2250 rupees. Did you guys understand this? Did you guys understand this? I hope you did. This is the answer to question number 16. This is the answer to question number 16. That's it. Simple one. Then we have one more wherein we would have to prepare that what you say that table. I'll try to get that file. I'll put it so that I can show it to you after break. Yeah. Shall we take a break at this point? Come on, guys. Come on, guys. Respond. Shall we take a break at this point? Shall we take a break at this point? Respond, respond, respond. Yes, we'll take a break. It's almost 10 o'clock. We'll take a break till 10:30. See you all back at 10:30. When we'll go till for another 2.5 hours. 8 to 9, 10, we've taken 2 hours class. After break, we'll go for a 2.5 hour session. Yes? Okay. See you all on the other side of the break. Till then, have a nice breakfast. Refresh yourself a little. Stand a little in the sun if you can, and come back with your phones. Okay, guys. See you all on the other side of the break. Bye bye. Tata. Bye bye. Tata. Okay, hope things are fine now. Can you see me? I missed out on the light. I turned it on. Can you guys hear me as well? I hope everyone's back. Are you guys back from the break? Everyone's back. That's nice. Okay, guys. So, shall we get started? Shall we start? Shall we? So, we have one more question here on goods sent on return on approval basis. This question is where excess supplied goods on sale or return basis to customers, the particulars of which are given as under. Okay, date of dispatch they've given, party's name, amount, and remarks. All we need to do is we need to identify. Yeah, so we need to prepare the separate ledger, separate subsidiary book, one for goods sent, one for goods return. Yeah. How do we do it? Do you want to solve it completely? Oh, 2 minutes. Let everyone come. Okay, okay. Still 40 people. Now tell me, do you want me to solve this completely in an Excel sheet, or do you want me to show the answer and then tell this goes here, this goes here, this goes here, this comes from here, this comes from here, this comes from here? Are you fine with that? Are you fine with that? Tell me now. Should I show the answer and then tick items explaining them, or should I solve it completely? Solve or show? Solve the answer completely or show the answer and then mark it? Solve. Very good. I'll solve it. I think another 20 people would join. Show the answer and then tick it. Neeraj is saying show the answer and explain it, Sarji. Surendra, I didn't understand. What do you mean by completely? Just show the answer. Okay, okay. Okay, okay, okay. Few of you are saying solve, few of you are saying show. So there's again conflict here. Fine. I will decide whether to show or solve. I've done the previous one. I'll show this one. If you guys still don't understand, I'll definitely solve it for you. Fine. Is it fine? Okay. I think everyone's back. Come on. Shall we get started? Now, अभी चालू करते हैं. Have a look. This is 9B. Yes, here it is the answer. Here is the answer. So what is that they want us to prepare? They want us to prepare a goods on sale or return, sold and returned table. Okay. Let us start with each of the items. Have a look. There is 10th of December 2017, ABC and Company, amount is 10,000. No information till 31st December. They've told that goods are to be returned within 15 days. We return within 15 days. So what is the last date for them to return? Last date. Or to say, can I call it due date? What is the due date? 10th of December, we say 15 days. If I add, it will become 25th December. 25th December, they would have to tell something. What have they told? There is nothing happening on 25th of December. No information till 31st. So on 25th only it is considered as sale. Do you agree with me? 10th, I have given the goods. Within 15 days, they would have to return. 25th of December is the 15th day. On the 15th day, have they returned? No. Till 31st of December, there is no information from them. So, shall I consider it as sale? Yes, I would have to consider it as sale. So, when do I consider it as sale? I will consider it as sale on 25th of December. I will consider it as sale on 25th of December because that is the date on which that 15 days time is getting over. Have a look at the answer. Have a look at the answer. What is it? Date 25th. It is considered as sale. See, date is 25th. On that date, it is considered as sale. You guys get that? Come on, let us go to next one. On 12th of December 2017. Yes, on 12th of December 2017, DF you sent. So what is the due date? 27. If I add 15 to it, it will become 27. So the date is 27th. Am I right? So 27th is the last date. When did he return the goods? He returned the goods on 16th only. So do I actually wait till 27th? No, I will not wait till 27th. Why? On 16th only it is return of goods to me. So on 16th I have to treat this as returns. On 16th I have to treat this as returns. So what will I do? I'll come here. See, have a look. December 16th it is treated as returns. December 17th, December 16th it is treated as returns. Did you understand? December 16th returns 15,000. Perfect. Is this making sense? If you want me to solve, I can solve it. Does this make sense? I'm explaining at the question and then showing you the answer. Okay, next. We'll go here. Next, we have on 15th of December, 12,000. 15th plus 12 will become how much? So 15 plus 15 will become 30th. So 30th is the last date. 30th is the last date. Then what happened? GHI, 12,000 is the value. 2,000 returned on 20th December. 2,000 is returned on 20th December. So whatever the remaining, it is not returned. It is not returned. You would have to wait till the end. What date are you doing? We're doing it on 31st December. So 31st December, I'll assume to be balanced to be sales. So 20th 2,000 return, 30th 10,000 sales. I repeat, on 20th of December, 2,000 will record as returns. On 20th, I'll record 2,000 as returns. And the balance I'll record as sale on 30th. Why? Year end is 31st. By 30th only they didn't return anything means it's accepted. Have a look. 20th, returns how much? December 20th, 2,000 is returned. Balance 10,000 is assumed to be approved. This is not on 20th, this is actually on December 30th. The sale part is on December 30th. If you want, you can write below one more date, December 30th, and then write sales 10,000 there and write dash here. That's also valid. However, it's not having an impact. We're doing it on December 31st. This is prepared when? This is prepared as on what date? 31st of December. You get that? Next, we'll go to the next transaction. Next transaction is DEF and company, 16,000 worth goods, 20th of December. If I add 15 days, it will become 35th. Do you have 35th? No, 31 days are there. So, after 31, you would have to count 5 days. After this 31st, you need to count 4 days in the next month, January, 1st, 2nd, 3rd, 4th. So, 4th of January is the due date. So, they can approve it before 4th of January. But goods are retained on 24th only. 24th of December only, DEF and company told, I will keep the goods. I want the goods, I will keep the goods. So what will I do? On 24th of December, I'll record it as sales. Have a look. 24th December, sales 16,000. DEF and company. Perfect. Yeah, am I making sense? Next. Next one, what we have is with regard to ABC and company. 11,000 rupees is the value of the goods. 25th of December. 25th, if I add 15, it will come to how much? Only 6 days in this year, 9 days in the next year. So 9th of January 2013. We have time till 9th of January 2013 to approve these goods. They have 9th of January to return these goods till that time. But we're doing it on 31st of December. Okay. So goods are retained on 20th. 28th of December only told, I want the goods, I will keep the goods. So what will you do? 28th of December only will write it as sold. Have a look. 28th of December you wrote it as sales 11,000. Perfect. Did it make sense? It should. Next, lastly, we have on 30th of December 2017, GHI company 13,000 rupees. No information is given. Do we have time? Yes, we have time till 14th of January, Makara Sankranti day. Till then, there is time. So, what is it? Till then, there is. Oh, sorry, I'm writing 3 all the places. It is actually 8, isn't it? It is actually 18, 18, 18, 2018. You get that? So is there still time left for them to approve? Yeah. So what will you write? It is neither sale nor returns. It is neither sale nor return. Have a look. It is neither sale nor return. Both the places there is blank. 13,000 is just there. 13,000 is balance. It is neither sold nor returned. Neither approved nor returned. It will be remaining as balance. So total what is the value of the goods sent? 77,000. 77,000 goods sent on return on approval basis. Out of that, 17,000 is returned. 70,000 is returned. 47,000 is sold. 47,000 is sold. Balance is 13. Where does this balance 13 come from? This 13,000 is that 13,000, which is neither approved nor returned. Done. Can we calculate the total of return and approve? Then we can transfer the. Can we calculate the total of returns and approve? Yeah, we can. We can. That's what I just did, isn't it? In 20th, shouldn't we write 2,000? In 20th date, shouldn't we write 2,000? 2,000. December 20th transaction. No, man. That 2,000 is for 15th. Oh, you're telling 20th you should write 2,000. Yeah, 20th you should write 2,000. See, written, no? December 20th, 2,000. It's written. But you have to write this 10,000 little below. 10,000 you write in the next column. But doesn't really matter. They've written it that way. Chill. But if you ask me what should you do, for the same transaction you should write date, one more date. December 30th and write 10,000. This 10,000 ke liye, this 10,000, I will call it 30th. This 10,000, I'll call it 30th. I'll say that it's on 30th. Sir, the remaining 10,000 not 27th, ma. It is 30th. Have a look. See, 20th is there plus 15 days. Sorry, 15th is it plus 15 days comes to 30th. It is 30th. It's 30th. You would have to write separately. But ICA material only they have not written. It's okay. Yes. Do you want me to solve this or is this kind of an explanation sufficient? This will save a lot of time. But do you understand is my question. Saving time is not the objective. Making you understand is the objective. Give me thumbs up saying that you guys understood or something. Then I can go ahead. Okay, let me take you guys to the next chapter. Shall we start with consignment? No response. Respond, please. Okay, you'll start with Unit 3 consignment. What to expect in in exam from this chapter? You can expect questions on computation of consignment stock, that is left unsold with the consignee. Then you can I expect a questions on computation of consignee's commission. Then okay, done. Yeah. Once you want me to show the answer, have a look. So this is the answer. This is the answer. Yes, Aditya, consignment and so on. See, I like to solve. I'm more of it. See, I started showing the answer because you people asked. In fact, I was of the opinion that I'll solve it. Yeah. Okay, done. Let's go ahead. Consignment. What to expect from the exam? Questions on computation of consignment stock, questions on computation of consignee's commission, and normal abnormal loss treatment, consignment profit computation using consignment account, and they can ask you accounting entries in the books of consignor as well as consignee, and ledger account as well, plus ledger, accounting entries plus ledger. They can ask ledger also, and that's it. Short note questions can come. Yeah, weightage is 15 to 20% for the entire chapter 6, but based upon the previous examination pattern, 10 marks is the maximum that you can expect. There was an attempt where there was an 8 marker question and one 2 marker true or false question from this chapter, so that gives it 10. But looking at the possibilities, they can give a 10 marker question and also ask a 2 marker true or false question. That's also there. Okay, guys, valid. Come on, let's get going. Important topics to revise: accounting entries in consignment transactions. What is a journal entry when the goods are sent on consignment? What is a journal entry for reversal of the load on it? What is a journal entry when the goods are sold, money is received, bad debts, commission, everything? You have to remember all the journal entries. And categorization of consignment expenses. This is important, guys. See, a lot of them won't give great significance to this, whereas this decides your entire answer. Because see, if you want to compute consignment profit, Your consignment closing stock should be correct. Your consignment commission should be correct. A lot of other items should be correct. If you don't get your consignment closing stock correct, no, then your profit would go wrong. Why will the consignment closing stock go wrong? Because there is a categorization of expenses. Do you guys remember? Expenses incurred by the consignor are completely non-selling expense. Expenses incurred by the consignee can be categorized into selling expense and non-selling expense. What is selling expense? What is non-selling expense? Any expenses incurred till the time the goods will reach the place of the consignee, or till the time it reaches the godown of the consignee or the warehouse of the consignee, is non-selling expense. After the goods reaches the godown of the consignee, any expenditure incurred is selling expense. I repeat, any expenditure incurred till the time the goods reach consignee's godown is non-selling expense. Expenses incurred after the goods will reach consignee's godown is selling expense. Yeah, that categorization is important. Sundries. Yes, you can write. You can use the word sundries. Sundry basically means that normal course of operations. Now you write sundry data. What do you mean by sundry data? What do you mean by sundry in that? Sundry means regular operations. Now this is a person from whom I purchase goods in the morning. This is a person to whom I sell the goods in the evening. Every day I'm doing business with them only, and that is my bread, butter, jam. That's my regular course of operations. Do you get that? So those people are called my sundries. Sundry debtor, sundry creditor. Sundry means debtors and creditors in the normal course of operation for trading. Done. If you just say asset debtors, asset creditors, what does it mean? From they are the people from whom you purchased asset or to whom you sold your asset, and you're supposed to receive money or pay money to them. Got it? I'll explain commission. Oh God, don't worry, don't worry. Commission. I haven't finished the chapter. Consignment just started. I'm telling you what to expect from the chapter, what is the weightage, and what are important topics. I have not. I didn't even tell what is consignment. Did I tell what is consignment? I'm telling you what are the things to be considered. Not that fast. Goodbye, goodbye. Don't worry. Chill. You guys want this chapter in detail? You're feeling little tensed about this chapter? Tell me. Main hu na. I'll explain it in detail. Bills of exchange also I wrote no in detail and then I explained, didn't I? Huh? Gautam, I'll explain Delcrater Commission. I'll explain the entire concept of consignment that way. Yes, I was sick guys yesterday, very sick. If not, if I would have time, I would have typed everything here. Points to remember and everything, entire theory, whatever is important for the exam, I would have typed. But halat bahut kharab. Like I couldn't sleep last night. I had like very bad. I was right after my 5 o'clock 5:30 class. I was on the bed, bad headache. Body has gone crazy. Mind, soul has been amazing. Yeah, feeling very good from the heart. But hmm, I'll explain. Come on, let's get started. Consignment. Okay, what is consignment? What is consignment? What is consignment? What is consignment? It is an alternative to sale. It is an alternative to sale. It's a technique of sale. It's a technique of sale wherein I can't reach out to everyone. Now, even if I go back to my same book example, I want to sell the book not just in Bangalore. I want to sell this book in Hyderabad. I want to sell this book in Ballari. I want to sell this book in Pondicherry. I want to sell this book in Mangalore. Lot of places. But I can't go to so many places. One person can be there at only one place at one time. So what will I do? There are a few students watching from Hyderabad. I'll tell them, I will send the books. Will you sell on my behalf? They will tell, okay, sir, send. I will put it to courier. I will send them. There are a few people watching from Ballari. I will ask them, will you sell the goods on my behalf? They told, yes, sir, we'll sell. I gave the goods to them, so they are selling the books on my behalf. Similarly, a lot of you people are from different places. I'm giving the books to you, and you will sell on my behalf. In this scenario, what is happening is I am not selling the books to you. I am not. I am giving the books to you, and you will sell on my behalf. Are you my employee? Am I your boss? No, no, cheche. No, sir. Just brotherly conversation. We are not, what to say, boss and employees. We are not employer-employee. What is the relationship between us? Principal and agent. Principal, what do you mean by principal and agent? Agent follows the instructions given by the principal. He will never use his brain, not do anything on his own. I'll repeat, agent only does what the principal says. They will not do anything on their own. They are not responsible for any of their actions. Who's responsible? What to say, the principal is responsible for everything. Sir, principal means PAL. No, it is PLE. So I am the principal. I am the principal. You are like an agent. I give the goods to you. I will give instructions to you. You will only follow the instructions. But what will you get in return? For this, you get something in return called as what? Anyone who can tell me? Commission. So I am principal. Principal. Okay. You are agent. Okay, what will I do? I'll send goods. I'll send goods to you. Okay, you get that? Now, what will you do as an agent? One second. Okay, now tell me. What will you do as an agent after these goods? You will sell it. Sells it to whom? To customer. So I am a principal. I will transfer the goods to you. You are an agent. You sell it to customer. You get that? Customer will pay money to you. Customer pays money to you. Okay, sells it. You sell it. So basically here the goods are moving this direction, this direction, this direction. Okay. What will the customer do? Customer will pay money. Pay money. What will you do with this money? You would have to return that money to me. You get that? Once you pay money, what will I do? I'll pay commission to you. Pay commission to you. So that's how it works. Did this make little sense to you as to how does the transactions flow? The sending goods is I will principally sending the goods to customer. Sorry, agent. Those are arrow marks, guys. Does that make sense? Those are arrow marks. Okay. Principal is sending the goods to agent. Agent sells it to customer. Customer will pay money. Agent pays it back to principal. Principal pays commission back to agent. This is how it works. Now, along with the sending of goods, you'll send one document. Along with the sending of goods, you'll send one document. What is a document? Now, if it is a sale, it is they issue invoice. If it is a sale, they issue invoice. Do you guys get it? But it is not sale. This is like a sale, but not sale. It looks like sale, but is it sale? It is not sale. So what I do is I give something called as pro forma invoice. No, what is pro forma invoice? Pro forma means what? Have you guys heard of pro forma? Pro forma is like format. What do you mean by pro forma? Pro forma means format. What do you mean by pro forma? Pro forma means format. Pro forma means format. This has the format of the invoice, but it is not invoice. This has the format of the invoice, but this is not invoice. So it will look like sale, but it is not sale. I'll give it to you. What will be there in that pro forma invoice? Pro forma invoice will have details of goods that I'm selling, quantity of those goods, how many goods I'm selling. Done. What is the value of it? And I would also disclose some instructions to you as to how to sell it, what price to sell it, how to collect the money, how to open it, everything. How much commission are you eligible to? How much commission will I give? How much commission I'm going to give you? You should know what will you receive. So I'll tell all that in where? In my pro forma invoice. So you sell the goods. After you sell the goods, customer will pay you money. This money, the agent has to transfer to the principal. When he's transferring, yeah, I will send it late, ma. Yeah, I think I'm feeling little better today. I hope to feel better, a lot better tomorrow. I will do that. Okay. So when you pay money, when you pay money, is it sales? Like, is it sales to the agent? It is not sales to the agent. If it is sales to the agent will prepare what? If it is sales to the agent will prepare what? Prepare sales account. But this is not sales account. Why? Because agent is just agent. It is not his goods. He is not the owner. He didn't sell goods. So what is it? You prepare something like a sales account, but it is not sales account. You prepare something like a sales account, but not sales account. What is it? It is account sales. What is it? It is account sales. Now tell me, what is account sales? It is a document prepared by the agent and sent to the principal. I repeat, it's a document prepared by the agent and sent to the principal. It comprises of the details. Relating to sales. How much is sold? How many units are sold? How much expense that agent has incurred? How much expenses as principal? How much expenses agent has incurred? And how much commission is he eligible to? Which customer, how much you sold? Which customer paid how much? Every details will be sent by the agent to principal in this document. So, along with the goods, principal sends a document called as principal pro forma invoice. Along with the money, agent sends a document called as account sales. Does this make sense? Does this make sense? I hope you guys understood till here. Okay. Next thing. Shall we go ahead? Now, who prepares account sales? Who prepares account sales? Agent. I don't know if you people are active. I'm not getting any messages. Okay. Who prepares account sales? Agent. Who prepares pro forma invoice? Principal. Now, in this course, there will be expenses incurred. There will be expenses incurred. Do you agree with me? Expense will be incurred. See, you pack all the goods, okay, on consignment. Now, books only. I need to send it to Ballari. I need to send it to Hyderabad. I need to send it to Mangalore. I need to send it to Pondicherry. I will pack all the books. I will keep the books. I will tell the books. You 100 books, no, go to Hyderabad. You 50 books, no, you go to Ballari. Will the books go by themselves like fly and go? No, the books will not. What is that I have to do? I have to load it. I have to incur transportation expenditure and then send them. Do you get it? Do you get it? So I would have to do that. So such expenses will be there. Now I assume that I send the goods. I send the goods. It will reach the city. It will reach the city where the consignee is staying. From that city, consignee has to take those goods to his godown. No, he will sell the goods. He will tell the goods, come with me. Will the goods come? No. Consignee has to again incur expenditure for transportation of the goods till his godown. After that, he has to keep the goods in the godown. He has to pay godown rent. He has to pay lighting expenditure, electricity expenditure, watchman expenditure, loading, unloading, packing expenditure, safety. If you take insurance, insurance expenditure. And when the customer comes and then sees the goods, customer says that okay, fine, deliver this to my house. Again, he has to incur carriage outwards, transportation expenditure to deliver it to the customer's house. So all these expenses will be incurred. Okay. So now with regard to expense can be incurred by two people. Expense can be incurred by two people. Who are the two people you'll incur expenditure? Consignor. Consignee. Consignee's expenses. Consignor's expenses. Hey, who's consignor? Who's consignor? Do you guys know who's consignor? Who's consignee? Do you guys know who's consignor? Who's consignee? Principal is the consignor. Principal is the consignor. How about agent? Agent is the consignee. Sir, how do we remember it in the exam? Simple. Consignor is giving. Consignee is receiving. Look at the first thing. How does the transaction start? Transfer of goods. Transfer of goods. So who's is calling the goods? Who's receiving the goods? The person who's receiving. The person who's receiving. EE. The person who's receiving. You use the word EE. I told no. Draw E. Transferor, transfer E. Endorser, endorse C. Consignor, consignee. Whoever receives. Whoever receives will have the word EE with them. Okay. Yes. Very good. Huh? That's good. I don't know how you remember, but that's how it's easier to remember. Consignor's expense, consignee's expense. A very important point. A very important point. Okay. All expenses. All expenses. Whether incurred by consignor or incurred by consignee should be borne by consignor. I repeat, all the expenses, whether incurred by the consignor or incurred by the consignee, has to be borne by whom? Has to be borne by whom? Consignor. All the expenses, whether incurred by the consignor or incurred by the consignee, has to be borne by the consignor. Why? Consignee is not the owner. It is not sales to consignee. So profit goes to whom? Consignor. Profit goes to whom? Consignor. So the expense also should be borne by whom? Consignor. Whoever gets the benefit, same person should take the expense. If I am getting the benefit, I should bear the expense. If you are getting the benefit, you will bear the expense. For your profit, why will I bear expense? Or for my profit, why will you bear the expense? Wherever the profit goes, expense also should go there only. Get that? So consignor will get the profit on consignment. Consignor should bear the expense on consignment. It doesn't matter whether it is consignor's expense or consignee's expense. Why? Isn't it your goods? You get that? Done. Next, further, this expenditure whichever is there, it can be categorized into selling and non-selling expense. What is it? Selling and non-selling expense. Non-selling expenses. Selling expenses. Now the question is, what are non-selling expenses? What are selling expenses? Any expenditure incurred, I'm not telling you it should be cartage, it should be coolie, it should be loading, it should be packing. I'm not telling it at all. Any expenses, it can be any expenses incurred till the time goods will reach the go down of the consignee is non-selling expense. Any expense till the time goods reach go down. Go down means what, sir? Warehouse. Any expenditure till the time the goods reach consignee go down is non-selling expense. Okay. What about selling expenses? Expense incurred after goods reach, after it reaches the consignee's go down. Once it reaches the consignee's go down, if you incur any expense, what will it become? It will become selling expenses. Now the question is, sir, why are we doing this partiality? Why are we doing this categorization between selling expense and non-selling expense? I will tell you. Non-selling expenses. Non-selling expenses. Yeah, to be included. To be included in value of closing stock. Whereas, what about selling expenses? Not to be included in value of closing stock. Selling expenses are not to be included in the value of closing stock, whereas non-selling expenses are included in the value of closing stock. When we compute the value of closing stock, that stock that is left unsold, remaining with the consignee, it will include the cost of such goods plus the expenditure incurred for transportation by the consignor, expenditure incurred for transportation by the consignee, go down expense, everything, basically everything, till the time they reach the go down. Once the goods reach the go down, any expenditure incurred after that is to sell, and it will be selling expense. This is like the trading account and P&L account concept. Non-selling expense is direct expenditure to be taken in trading account, whereas selling expenditure is indirect expenditure to be taken in P&L account. But when we prepare consignment account, we don't distinguish trading and P&L. We do it as one solid account for evaluation of profit. So the closing stock should not get affected. That's the reason we do it this way. I hope you guys got this point. Am I clear? One more important point is all the expenditure incurred by consignor is selling expenditure, non-selling expenditure only. Consignee can incur selling as well as non-selling. Consignor will incur only non-selling expenditure. Consignor will incur only non-selling expenditure. Expense incurred by consignee can be selling or non-selling. You get that? Okay, that's the basic part. Come on, let us go ahead. Here I use the word commission. Shall I discuss commission now? Expenses, did you guys understand? Yeah, I want some kind of response, guys. I've done so much. Yes, Aditya has given a thumbs up. Hmm. Come on. Let us now discuss commission. Shall we? Okay. Commission, there are types. One, ordinary commission. I usually don't write the words before I explain. I first tell them the story, make them understand what is it, why is it, and then I usually read it. But you people, there is nothing called suspense to you. People, because you've already seen the entire movie of CA Foundation. Now what you're seeing is you're seeing the movie once again. Sir, we are responding constantly, but you are seeking our chats lately. Oh, sorry. I'm receiving it lately. Neeraj is requesting the last class to be on Zoom. Neeraj, somewhere, even I am a great fan of Zoom. Even I would want to. But I don't know. It's been a decision that we'd have to do it on YouTube that larger audience can view it. That's it. Yeah, Neeraj, even I would prefer that lot of interaction comes in. You guys will tell me your doubts in between and I can do it. Now there is that 10-second gap. Okay, tell credit commission. Then we'll have last one, overriding commission. These are the types of commission. These are the types of commission. You get that? Now, okay, what is ordinary commission? But fine. One more important thing. Before I go into this, I would have to tell you a couple of things. Commission. Commission is always given on the goods sold, not on goods sent. Okay, commission is computed on goods sold and not on goods sent. Whenever the commission is to be computed, I've seen few people in the very heat of the moment they forget and then compute the commission on the goods sent on consignment. No, it's not like that. Yeah, it is to be computed on the goods sold, because sales is where the effort has to come from the consignee. Wherever you put effort, you get return. What effort would you put to receive goods? No effort. Yeah, when you sell it, you receive. Okay, then the next thing, commission can be percentage or per unit. Commission can be percentage or it can be per unit. Now, percentage wise commission, like 2% commission, 100 rupees if you sell, 2 rupees commission, 1000 rupees if you sell, 20 rupees commission. It's like that, percentage basis. Or it can be per unit. 1 unit you sell, 2 rupees commission. 2 units you sell, 4 rupees commission. 100 units, 20 rupees commission. It's like that. So the commission can be either per unit sold or per percentage of the amount. Either it is per unit or percentage, it should always be on sale. It is percentage of goods sold. It is per unit of units sold. Percentage of goods sold, not percentage of goods sent. It is per unit of units sold, not per unit of units received by the consignee. That's an important point. Okay. Yeah, Aditya. You are right, Aditya. Yeah. Okay. It is computed on goods sold, not on goods sent. Commission can be either calculated as a percentage or per unit. Commission is an expense. Now tell me, is commission direct expense or indirect? Or sorry, tell me. To the consignor, is commission a selling expense or a non-selling expense? Answer this. Commission is selling expense or non-selling expense to consignor? Commission is selling expense or non-selling expense to consignor? Come on. Respond. How much? What is it? Commission, selling expense, non-selling expense? Seeing, selling. Yes, you are right. It is selling expense. Because of the commission that I pay, can I increase the value of my closing stock? No. Closing stock will not be impacted because of commission. In the computation of closing stock, will we take selling expense? We will not take. Will we take commission? No, we will not take. Commission is the consideration given by the consignor to the consignee for the efforts put in by the consignee. I repeat, commission is the consideration given by the consignor to the consignee for the efforts put in by the consignee in selling the goods. I repeat, commission is the consideration given by the consignor to the consignee for the efforts put in by the consignee in order to execute the instructions given by the principal or the consignor. Okay. Now, there are types of commission. What are the types of commission? Types of commission: ordinary commission, calculated commission, overriding commission. What is ordinary commission? It is normal. For the normal sales, you give some commission. That is called as ordinary commission. You get that? So commission for sale, commission for sale of goods on consignment. This is ordinary commission. Simple. Commission is ordinary commission. What is del creditor commission? You need to understand the logic of del creditor commission. Now, I told you previously that consignee will get commission for goods sold. Commission is received by the consignee for goods sold. Is it for goods sent? No. Now assume I am consignee. Yeah, I can send this Excel sheet also. I'll send it. Now, I am consignee. Who am I? Consignee. So me being consignee, I want more money. So that I can take my wife out for longer vacations. I can take my kids out for longer vacations. I can eat more lavish food at home. I can have a bigger car. So everyone wants that. So assume that I am a consignee, I want more money. How do I increase my commission? Yes, I will send, I will send, I will send. How do I increase my money? In order to increase the money that I would have to increase my commission. Commission is computed as goods sold multiplied by percentage, or goods sold multiplied by commission per unit sold. So in this case, I would have to either increase my goods sold or I have to increase my commission rate. I will talk to consignor and ask, give me 50% commission. Kapala koditan. I'll say, get lost. He would not be interested at all. So I cannot ask him to increase the rate. So I would have to increase the number of units I'm selling. I would have to increase the number of units I'm selling. So I would have to start selling it. You know what will I do? I will go to everyone and then ask, please buy, please buy, please buy. They're not willing to buy. They're not willing to buy. There are very less people willing to buy. You know what will I do? I will tell them, take these goods. Take these goods. They'll say, no, I don't want. Like, take these goods. Don't pay money. Take these goods. Don't pay money. They will take. No, if I say don't pay money, but take the goods, everybody will take. Now I give the books to you and ask you to sell. You're like, take this book, don't give money. It's okay. You will, everybody will take it then. If it is free, you will ask one for you, one for your neighbor, and one for the person who stays above your house. One for your old friend also will ask if it is free. But consignor is going to question, how can you give the goods free? So to consignor, you will tell one lie. It is not free, it is actually credit sale. What did they told they'll pay later. They told they'll pay later. So will the consignor believe? Consignor is not in the spot. Consignor will say, okay, okay. So as a consignee, you start doing credit sales. When you do credit sales, the sales will increase. When the sales increases, commission increases. When the sales increases, commission increases. Consignee full kush. Consignee full kush. Why? More sales, more commission. More sales, more commission. But consignor is also happy. Oh my God, so much sales. Money will come. He's waiting. But you know what happened? All those people to whom you sold goods, you told them, take the goods. It's okay, you don't pay. So will they pay? They won't pay. I am consignor. I will ask you, hey consignee, where is that credit sales money? You know what you say? You will say, sir, all bad debts are bad people, sir. World is so bad. We are flooded with so bad people that they'll take the goods, but they will not pay money. You will tell that. So what will I tell? I'll say, okay, fine. See, nothing that you can do. At the end of the day, I should bear profit. I should take loss also. And Papa, you helped me in selling the goods. It's okay. You don't take it to heart. You relax. I'll tell that. So who's bearing the bad debts expense now? Bad debts is an expense, isn't it? Who's taking the bad debts expense? See here, any expenditure, all expenses, whether incurred by consignor or by consignor, should be borne by who? Consignor. At the end of the day, what's happening? I am losing money. I'm losing money. Bad debts. I'm losing money because of bad debts. Now, this is a very bad scenario. This is very bad. This is like shaking the entire place. Okay, I'll tell you why. Now, assume that I'm selling this. I'm selling this. I'm selling this. This is a remote control. I use it to control the lights. So I'm selling this. Okay. This is 100 rupees. What is the value of this? 100 rupees. If I sell this, I'll make 10 rupees profit. How much profit will I make? 10 rupees. And I'm giving you commission of some 2 rupees. I'm giving you commission of some 2 rupees. I will give this and then ask you to sell. What do? You give this free to someone. You give this free to someone. When you say you will tell it credit sales. That idiot will not pay money. So I will not receive money against this. I've lost remote control. Over and above that, I have paid you 2 rupees commission also. For you for 2 rupees commission, you give 100 rupees worth of product free to someone. For your 2 rupees commission, you give 100 rupees worth goods free to someone. I am losing 100 rupees worth product, 2 rupees your commission. You get that? And that guy is gaining 100 rupees. You are gaining 2 rupees. I am losing everything. I'll become stressed. I'll lose my hair. I'll have dark circles. And then what? My tummy will become fat. I'll become fat and all. You get that? I'll get glasses and all. Yeah, everything will happen. Then I'll start dying very soon. So what will I do? I will understand this one friend. This consignee is only doing all this to get more commission. I will tell. If you want more commission, I'll tell to consignee. Okay, if you want more commission, ask me. I will give you more commission in the name of Del Creditor Commission. I will give you more commission in the name of Del Creditor Commission. But don't do this drama of giving the goods free to someone and calling it credit sales. Don't do this. Don't do this drama of giving the goods to someone for free and calling it credit sales. Then the consignee will be like, okay, fine, I understood. It is my mistake. I will not repeat it. I will not create loss for you. Okay. Then what is the consignor doing here? Consignor is paying extra commission to consignee. What is that extra commission? Del Creditor Commission. What is it? Del Creditor Commission. What is it? Del Creditor Commission. This Del Creditor concept, no, it basically arises from the West. Basically, our like what to say that French countries, French and everywhere. Del Creditor means dealing with credit. The literal translation for del credit goes for dealing with credit. Now there is a credit transactions happening, no? So dealing with the credit transactions is done by the consignee. So because he deals with the credit transactions, you give him extra commission called as del credit commission. Did you understand the concept of del credit? It is dealing with credit, not India, not English, French. So in French, for del credit, dealing with credit, what do we call it? Old French, okay? Dealing with the credit transactions is done by consignee. Consignor is telling, I don't know this credit transaction. It is your responsibility to collect the money and give it to me. If you collect cash, you give me cash. If you don't collect cash, you should bear the expense. You should bear the expense. If it is cash sales, I will get the cash. If it is credit sales, you have to collect and pay. If you don't collect, I will ask you. You have to pay. You are an agent, but still you are responsible to pay me if the customer doesn't pay. Then what will the consignee do? Consignee will find only good customers who will repay the money and give the goods only to them. He will not give goods to every random person. Did you understand what I'm trying to tell? That is del credit commission. So what is del credit commission? Commission paid to consignee to take the risk of bad debts. To take the risk of bad debts. Now, what does this mean? Now, assume there are two scenarios. Or I'll put it here only. I'll bring this little below. Overriding commission will teach you later. Okay, now del creditor commission. Is paid, is not paid. Bad debts expense to be borne by. Who should bear the bad debts expense? Who should bear the bad debt expense? Bad debts expense is to be borne by. If it is paid, it should be borne by consignee. If it is not paid, it should be borne by consignor. So this commission is paid by the consignor to the consignee to transfer the risk of bad debts. This commission is paid by the consignor to the consignee to transfer the risk of bad debts. You get that? You get that? Everyone understood? Bad debts risk to be transferred by the transfer by payment of del creditor commission. Hey, whoever was asking del creditor, did you understand? Okay. If del creditor commission is paid, expense is to be borne by consignee. If not, it is to be borne by consignor. If it is consignee, what does it mean? Deducted from his commission. Deducted from his commission. You will deduct from his commission. If it is to be borne by consignee, you will deduct from his commission. Did you understand, guys? Did I make sense? Okay, next. One more important point. These people usually get it wrong. What is it? Now you tell me. On what do I correct? On what do I compute del creditor commission? On cash sales, credit sales, or total sales? On what do I compute del creditor commission? On cash sales, on credit sales, or total sales? On what sales do I compute del creditor commission? On cash sales, credit sales, or total sales? Answer. On what do I compute del creditor commission? On cash sales, on credit sales, on total sales? Answer. Credit sales. Aditya, very good. Thank you for answering, Aditya. Next. Credit sales. Actual sales. Credit sales. Yeah, credit sales. I told you, didn't I? Lot of them get this wrong. Yeah. Unless specifically mentioned in the question. Always compute commission on total sales, not only on slight heart attack. Is your concept gone wrong? Whatever you have learned previously, or whatever you remember, or whatever you had assumed, unless specifically mentioned. See, in the question they should mention Del creditor commission 2% of credit sales. They should tell. If they don't tell, you will always compute it on total sales. You'll always compute it on total sales. I'm telling this to you once again. Unless specifically mentioned in the question, that you need to compute it on credit sales, you will never compute it only on credit sales. Even though it is Del creditor commission, even though it is the commission for dealing on credit, Del creditor commission is also to be computed on the total sales. Del creditor commission also should be computed on the total sales. I repeat, Del creditor commission also should be computed on the total sales, and not only on the credit sales. Okay, guys. Okay, shall I go to overriding commission? Okay, I'll go to overriding commission now. Third type of commission. What is third type of commission? Overriding commission. Okay. Sir, can't we write note if not mentioned? No. If they don't mention anything, you have to do it on total sales. You have to do it on total sales, Hitler. Sir, can you explain the example again? Quick revision of Del creditor. Yes, I'll show you an example. Just wait. Ruko zara, sabar karo. I'm not that Hindustani bhau, but still I can tell that. Okay, I'll do that. I'll do. Let me finish overriding commission also. Then I'll show it. Okay, is that fine? Gautam? Yeah, come on. Del creditor commission. What exactly is Del creditor commission? Now, I am a consignor, you are a consignee. I am a consignor, you are a consignee. Now, assume I will give goods to you and you are supposed to sell. I can either give you commission based on percentage or per unit. The significance of percentage comes here now. Assume the commission can be given on percentage and per unit both. I agree that I'll give you commission based on per unit. Based on per unit. For every unit you sell, you will get 1 rupee commission. What is the commission? For every unit you sell, you will get 1 rupee commission. And in that pro forma invoice, remember pro forma invoice? I told you here, pro forma invoice. I have given the instruction. You need to sell every unit for 100 rupees. You need to sell every unit for 100 rupees. So then what's happening? I will give you 10 units. You will sell 10 units for 100 rupees. You will collect 100 rupees each, give it to me. I'll give you 1 rupee per unit as commission. That's how it's working. Now, there are certain people whom you find, to whom you can sell it at higher price. You found some foreign people, or you found some innocent people, rich people. There is no MRP written on that. Now you feel like, okay, fine, hey, I can cheat these people. I can sell it for higher price. You feel like you can sell it for higher price. So you sell it for higher price. You sell it for 120 rupees. If you sell it for 120, still that 120 has to be paid to me. I will give you only 1 rupee commission. I will give you only 1 rupee commission. But I asked you to sell it at 100. You sold it at 120. So my profit substantially increased, but still you're getting only 1 rupee. So will you be happy? You will be unhappy. So if that is the case, you will never ever make an effort to sell it at higher price. My point is, if I pay you per unit, you will never ever be motivated to sell it at higher price. Selling it higher price is how I boost my profits. You get that? So I should motivate you to sell it at higher price. So what would I do? In order to motivate you to sell it at higher price, I give you percentage commission. I will give you 10% commission. If you sell it at 100 rupees, you get 10 rupees commission. If you sell it at 120 rupees, you get 12 rupees commission. If you sell it at 200, you get 20 rupees commission. So you'll get the commission based on that performance of yours. If you get me more profit, you will get more commission. That's how it works. But even at that point, there is a point where you find it not very good. Why? See, 100 rupees is the value of the goods. You sell it at 120. 20 rupees profit to me. Out of the 20 rupees, I am giving you only 10%, man. 2 rupees. I'm getting 18. Whose efforts? Your effort. Who sold it for 20 rupees extra? You. But I'm getting only 2 rupees. Is that fine? Not actually fine. People will start finding cheat codes there. People will start deceiving the consignor and then start doing cheating. They will tell the customer, sir, pay 100 rupees by check. I will give it to consignor. 20 rupees, you give me cash. You start doing that. That's not fair. How do you stop that practice? You start giving the customer, you start giving the consignee overriding commission. Overriding commission is the commission paid in excess of ordinary and deliberated commission. It is the commission paid in excess of ordinary and deliberated commission. This is the commission given for additional performance or special performance. I have asked you to sell it for 100. You sold it for 120. Wah, Mogambo, Kushua. Take extra commission. Take extra commission. This commission is given only for the special performance. This commission is given only for the special performance. Sales at higher price. Sales at higher price. You get that? Commission given over and above ordinary and deliberated commission. For why do we pay over and above that? For sale of goods at higher price. For sale of goods at higher price. Because you sold the goods at higher price, I'm giving overriding commission. Now, just imagine, the goods are supposed to be sold at 100. What is the price? What I'm telling in pro forma invoice? Pro forma invoice, I'm telling sell the goods at 100 rupees. Sell the goods at 100 rupees. You sold it for 120 rupees. You sold it for 120 rupees. I will tell overriding commission 10 rupees. Oh, sorry, overriding commission 10%. Overriding commission 10%. Now tell me, that 10% is to be computed on 120 or 100 or 20. I will repeat. The expected selling price 100. Expected selling price 100. I'm expecting you to sell it at 100. Actual selling price 120. Actually, you sold it at 120. What is the price that I'm expecting you to sell at 100? What is the price at which you sold at 120? Yeah, I have promised you overriding commission of 10%. I have promised you overriding commission of 10%. Now this 10%, should it be computed on 120? Should be computed on 100 or should be computed on 20? Rahul says 20, Anjana says 20, Charan, Shreya and Neeraj says 120. Shreya deleted her answer. Why Shreya? Sir, instead of that, if he sells it for 120, he need not send only 100 for consignor. Keep 20 with himself, saying that he had sold only for 100. Aditya, you have to give invoice. You have to give invoice. Invoice is the sale. Whenever you sell, you need to give customer one bill. No, that bill will be given by the owner. Who's the owner? Owner is consignor. Consignor should raise the invoice and then give. So the bills are in the name of consignor. Consignor will get to know. If you tell the customer that you give me 120 rupees, but I'll give you bill for 100 rupees, will the customer agree? Customer will say, you collected 120, give me bill for 120. You get that? Okay. Just 20, 120, 120. I'll tell you. Overriding commission is computed on surplus. What is that surplus? In our example, it is 20. Those of you who told 20, you are right. Overriding commission is given only on that surplus portion. 100 rupees is the expected. Actual is 120. 20 rupees is surplus. On that surplus, you get this. So what is the surplus? Surplus is equal to actual selling price minus expected selling price. It is not actual sales minus expected sales. It is not sales. It is selling price. Price only. If you sell higher quantity, you will get normal commission or ordinary commission more. You will not get overriding commission. Overriding commission is for selling the goods at higher price, not selling higher quantity. It is not for quantity increase. If you increase the quantity, your ordinary commission only will shoot up. This is for the sale at higher price. I repeat, this is for the sale at higher price. You get that? Ha, Shreya. Okay. Oh, you answered it second time, so you deleted the first one. It is okay. Okay, guys. Okay, come on. Shall we take an example or shall we go to main question? I would have to explain one more concept. That is, one concept is regarding loader. Loader. Shall I write load also? On surplus commission is charged. Shall I discuss the concept of load now? Load and invoice price. Oh, you want me to do an example? Okay, okay. No, in the main question, only it's there. The main question what I've taken here. In this question, there is commission computation. If you want to do it here, we'll do it here. If you say no, sir, separately also you do, then I'll do separately. We'll do the main question. After that, if you still feel like you want something separately, then I'll do it. Is that fine? Okay. Because I want to do two more topics today after this. If this only takes too much time, I might miss it. Because again, tomorrow you'd have to end, no? Yeah. Okay, guys, come on. Load price and invoice price. What is load and what is invoice price? Now, consignee is mere agent. Consignee will execute my deals. Now, consignee's stomach should not burn. Consignee should not start feeling jealous of the consignor. Consignee should not become my threat. How will it happen? 100 rupees goods he will sell for 120. 20 rupees profit to me. In the 2 rupees commission to him, 18 rupees to me. So consignee will start feeling, oh my god, see, he's not selling, he's only putting it to the truck and sending. I will receive it, I will talk to customer, I will sell it, I will receive the money, I will give it to him. Only 2 rupees to me, 18 rupees to him. So for every effort of consignee, consignor is getting benefited. If consignee gets benefited by 2 rupees, consignor is getting benefited by 18 rupees. So if he becomes 1 lakh rupees rich, consignee, consignor will become 9 lakh rupees rich. So every time consignee has to grow, he has to grow the consignor more. So consignee will be jealous. Consignee will tell, no, why should I do this? Instead of being in consignment with this principle, I can buy these goods from someone else outside, not consignment. Buy and then sell. I will buy the goods and then sell them. Is that possible? Consignee might get this thought. If consignee gets this thought, consignor would lose lot of things. Consignor would lose lot of things. So consignor will say, no, I should not let this happen. I should not let this happen. So how do we ensure that consignee doesn't give doka and consignee doesn't start on his own? How do I ensure? How do I ensure? Why does the consignee feel like doing it on his own? Because he thinks that it's very profitable and he understands how much profit consignor is making. So as a consignor, you should not disclose your profit to consignee. As a consignor, you should not disclose your profit to consignee. How do you arrive at profit? Profit is selling price minus cost price. Profit is selling price minus cost price. How do you evaluate profit? Selling price minus cost price. Now consignee already knows selling price. Consignee already knows selling price. So if you tell him the cost price, you will identify the profit and he'll feel jealous of you. So what you should do? You should hide the cost price. You should hide the cost price. You get that? You should hide the cost price. That's what everyone does, no? Now when you go to one shop, you ask for something, they will tell what price will they sell. But does anybody say what price did they buy it? No, nobody will tell. That's something that you should hide it. You should never ever tell what price did you buy it. Yeah, if you tell what price did you buy it, they will easily compute your profit and they'll start thinking. They'll do your entire income tax return only. You get that? Now you people will sit now and then count how much salary does the faculty earn. Okay, 80 students into so much money, so much rent, so much faculty fee, and then you will count know how much money is the academy making. Every idiot does that in the class. Yeah, so you end up doing that. Similarly, consignee also will do it. So to ensure that the consignee doesn't do it, you should not disclose the profit to the consignee. In order to ensure that the consignee doesn't understand the profit, selling price is already known to consignee, you will hide the cost price. You will hide the cost price. Now the value of these goods is 100 and it is supposed to be sold at 120. I will not tell that this price is 100. I will give this to consignee and then tell him 115 rupees. 115 rupees. I am hiding the original price of 100. Consignee thinks that the price is 115. He will sell at 120. 5 rupees extra. 2 rupees he will keep, 3 rupees he will give to me. So he will feel like, oh, fine, not much. He makes 1 rupee more than me. Papa, he takes the expense, he takes the care of doing the goods. It's okay. You get that? So you will hide it. You will hide it by putting one burka on the cost price. So that inflated cost price is invoice price. What is that inflated cost price? Invoice price. You get that? Okay, now what is it? Cost price plus load is equal to invoice price. Cost price plus load is equal to invoice price. Did you guys understand? Cost price plus load is equal to invoice price. However, we need to adjust that. We need to adjust that invoice price by bringing it back to cost price in consignment account, because consignment account to have all the items at cost price. All the items at cost price. But if you send the goods at invoice price, what do you do? Remove. Okay. If goods are sent at invoice price, then load. Remove load to arrive at correct profit and correct valuation of stock. This is what you should do. Yeah. So what do you do if you remember your consignment account? Should I discuss all the journal entries? Hey guys, tell me, should I discuss all the journal entries? What is the journal entry when the goods are sent? What is the journal entry when the goods are sold? What is the journal entry when? Should I discuss everything in detail? Or is it manageable? Or do you guys have a fair idea? Should I discuss every journal entry? Chat is little slow. I'm receiving it very late. Huh. I will not discuss. But what I'll do is, when I start doing this problem, for this problem, when I prepare the ledger, I will tell the journal entries then. I will tell the journal entries and then post the ledger posting. Is that fair? That should be fair. Okay. So in your consignment account, on the debit side, if you read goods sent on consignment, in the consignment account, okay, observe. Consignment account, debit side, credit side. Okay. On the debit side, if you write to goods sent on consignment at invoice price. If you write invoice price, you know what you do? You would have to subtract load from this to make it cost price. How do you subtract? You cannot do subtraction in the ledger. So instead of in order to decrease the debit, I do credit. In order to decrease the debit, I do credit. What will I do? On the credit side, I'll write by load on goods sent on consignment. So what is the amount that I write here? I'll write here load. I'll write load. So debit invoice price, credit load. Ultimately, it will become debit will be like cost price. Done. Next. Now, with respect to sales, we will not do this. Sales, it will be there for the sake of profit. To opening stock. Balance brought down. That is opening stock. Last year's leftover, man. If it is there at invoice price. If opening stock is there at invoice price. How do you remove the load on that? Can I subtract from the debit? No. In order to decrease the debit, I would have to credit it. What will I do on the credit? I'll write by stock reserve. This name is used only for opening and closing stock. Okay, guys. So what will I write here? Load. So debit invoice price, credit load. So it will ultimately become like debit. What is it? Cost price. Now with regard to goods sent on consignment return. Okay, by goods sent on consignment return. The consignee can return the goods, isn't it? If the goods are sent returned to us, it would be written on the credit side. Correct or not? Goods are received. Goods sent on consignment returned account debit to consignment account. That's the journal entry. I hope you guys still remember. Done. So you write invoice price credit. So how do you nullify that load part? You write debit side. What is it? Load on goods sent on consignment return. Got it, guys? Next, what is the last item that would be there? There can be closing stock. Closing stock will come inside credit side in consignment account. What will you write? By balance carried on. Balance that is still there in the consignment business. Balance carried on. What is it? Closing stock. Assume that this closing stock is at invoice price. This closing stock is at invoice price. You need to record this at cost price. How do you do it? You have to subtract load, but you cannot subtract from the credit side. In order to decrease the credit side, you debit it. By what? We'll use the word by stock reserve. By stock reserve. So, with regard to opening stock and closing stock, with regard to opening stock and closing stock, you would be using the name stock reserve. With regard to opening stock and closing stock, you would be using the word stock reserve. However, with regard to other items, you will write load on that item and then you will write it. Do you guys get it? With regard to opening stock and closing stock, we will always write stock reserve. With regard to opening stock and closing stock, you will always write stock reserve. With regard to other items, you will write load on that item and then you reverse the load. Done. So this is sufficient enough, I guess, guys. Now we are good. Shall we start the problem? Shall we start the problems? Fair enough. Aditya says fair enough. Yes. Okay. Oh, we forgot to discuss loss. Loss of goods on consignment. There are two types of losses, guys. One, normal loss. Second one, abnormal loss. Okay. Yeah. I'm doing. Normal loss, abnormal loss. What is normal loss? Normal loss cannot be controlled. You can't do anything. You can't do anything. Now, when you buy tomatoes, when you buy apples, when you're transporting them, you need to put them in the truck and then bring them. When you put them in the truck and then bring them, the bottom layer of the apples or tomatoes will get crushed. Why? Because of the load that's there in the topper layers. The bottom layer will get crushed. You get that? That will become tomato ketchup or apple juice. Few smart people will tell, sir, that bottom layer, mein whatever apples are there, you keep them on the top. Artha aita. That bottom layer, mein whatever tomatoes or apples are there, you keep them on the top so that they don't get crushed. Then I'll tell, sir, something else will be in the bottom. Again, that you take and then keep them on the top. Ultimately, don't keep anything in the bottom. You put one height table and then you put everything on the top. What nonsense. Okay, fine. That 1 kg, 1.5 kg will get crushed. No, it cannot be stopped. But if 10 kgs, 20 kgs are getting crushed, then it is your mistake. So, loss which can be controlled by us is abnormal loss. Loss which is normal. You do whatever you want, but that loss will be there. That is normal loss. When you're putting that petrol from that petrol gun to the bike, no, some amount of petrol will evaporate. You can't stop it. You can't stop it. You'd have to refrigerate the entire fuel station. If you refrigerate the station, no, then the things that come out from the AC can actually catch fire. So you can't refrigerate. So you can't stop that loss. So that loss cannot be stopped. That is normal loss. But whatever the drop which falls on the ground, which they put on the entire seat cover somewhere by mistake, that can be stopped. That is abnormal loss. Whenever there is normal loss which cannot be controlled, what do we do? Adjust only in units. Adjust only in units. Adjust only in quantity. Okay, so what will happen? Basically, good units, price of good units will increase. Sorry, price per unit of will increase. How about abnormal loss? Abnormal loss can be controlled. It is something that can be controlled. You get that? So debit to P&L account. or charge to P&L. Charge it like any other expense. You charge it like any other expense to P&L account. You guys get that? Sir, how to calculate commission before and after profit? Oh, before and after profit. It is not before and after profit. It is before charging and after charging basis. Rajat, then that is not part of our consignment chapter. That is part of our partnership and final accounts chapter. Okay. When calculator commission is issued and when not issued. Okay, fine. I'll do that. Okay. Okay, okay. Disha Jagannath is asking, what is the journal entry for calculator commission? Okay. Bad debts, bad debts. Bad debts entry. Okay. Two books we have to write. I'll write here bad debts when del creditor commission is not paid. Done. Next I'll write bad debts when del creditor commission is paid. Happy? I'm doing what you asked. And I'll not just show accounting in one books. I will show accounting in both the books. Okay, in the books of consignor. Consignee. Your happiness is my importance. Mm. Sorry, excuse me, guys. It's hurting. Hmm. Okay. Bad debts entry in the books of consignor. Now, whenever the goods are sold on credit, I'll write two entries. When the goods are sold on credit, and the next one is okay. Okay, I'll write it here if you want. When the goods are sold on credit. What is the journal entry when the goods are sold on credit? Consignment debtors account debit to what? Consignment account. Consignment stock is reducing, so consignment account credit. Consignment debtors account debit because debtors are supposed to pay money. If it is cash sales, you'll write cash account debit to consignment account. Or consignee has received the cash, then you'll write consignee account debit to consignment account. If you have received the cash trade, you'll write cash to consignment. If consignee has received the cash, you'll write consignee to consignment. If it is credit sales, the entry will be consignment debtors to consignment account. No entry in the books of consignee. Will consignee pass in entry? No, consignee will not pass in entry. Why will consignee not pass in entry? Consignee will not pass entry because it is not consignee sales. It is consignor sale made by consignee. Okay, done. In the books of consignor, bad debts. See, when commission is not paid, who will bear the expense? Who will bear the expense? To be borne by consignor. So we will write the journal entry. Bad debts account debit to debtors account. What will be the entry in the books of consignee? Consignee, no entry. Why? It doesn't bother consignee. Consignee's responsibility is to sell. Consignee has sold. Now, however, in the books of consignee, in the books of consignor, when the del creditor commission is paid, del creditor commission is paid. So what is happening? But bad debts is there. No, bad debts is an expense. Bad debts will decrease my consignment debtors. My consignment debtors are decreasing. Can I write bad debts account debit? No, I'll not write bad debts account debit because bad debts is not my expense in this case. That bad debts has to be compensated by whom? Consignee. So I will write consignee account. So bad debts expense I will not write. I will write consignee account debit to consignment debtors account. Consignee account debit to consignment debtors account. I am not recording it as bad debt in my expense. Debtors are decreasing. Debtors are decreasing. So credit. But it is not my expense. I would have to still receive. Debtor should pay. If the debtor doesn't pay, consignee should pay. So debtor is decreasing. So I'll add it to consignee. Consignee has to pay me. You get that? There are few books which will write the journal entry as bad debts to consignment debtors. Then instead of transferring these bad debts to P&L, they write consignee account debit to bad debts account. But I'll tell you, don't record it as bad debts only. Just straight away give it to consignee account. You get that? Few people say that the journal entry should be bad debts account debit to consignment debtors account, then consignee account debit to bad debts account. But I am of the belief that you can write consignee account debit to consignment debtors. However, both would lead to the same place. Okay, guys. Next, what is the entry in the books of consignee? For consignee, it is expense. For the consignee, it is expense. So consignment expense, or you can write bad debt expense. Debit. If he pays in cash, you will write to cash. If he is yet to pay, see if you pays it in cash, no, you will write cash account debit, cash account credit. If he is yet to pay, he has not paid, then what do you say? You will write it to consignor because you would have to pay to consignor. If he has paid so much expense, if he has paid that bad debt money to consignor, you will write cash account. If he has not yet paid, if it is payable, it will be to consignor account. So this is the entry. Did this make sense? Who asked? Someone asked. You want to copy quickly? I got a lot of messages. Bad debt journal entry is done. Disha Jagannatha. You can see. Rajat, I will explain that before and after charging basis. I will explain when I do final accounts and also when I do partnership. Then instead of writing load on this, can we write goods sent on consignment? Yeah. You can write. You can write. Disha is asking. You can write the same ledger name, ma. Yeah, you can write the same ledger name. But in the bracket, you do mention it as load. You get that? Okay. I hope it's done. Can I now take you people to problem and then solve it? Shall we now do problems? Okay, come on. Let us do problem now. Do you want me to solve the problem or do you want me to run through the answer? You guys tell that also. Do you want me to solve the problem or run through the answer? Show the answer and then tell how does each item come. I am fine with both ways. I can solve or I can show the answer and then tick. Or show the answer and explain. Should I solve it or show the answer and explain? You want me to solve it? Do the answer in the sense, Charan, do you mean solve? Do you mean solve? Yeah, I will solve it. We'll do one thing. There are two problems. One of it I will solve, one of it I will show. One of it I will solve and explain. Other one I will show. Is that fine? Okay, come on. Let us do. We'll address both the categories. Question number 14. Okay, question number 14. Jill of Mumbai. Mr. Jill of Mumbai consigned to Mr. Jack. So who's consigner? Jill. Jill is consigner. Rick. Okay, okay, okay. Fine. For sale at invoice price. Read the last line. You are required to prepare consignment account and the account of Mr. Jack in the books of Mr. Jill. So we'll start preparing consignment account. What are the things that we need to prepare in the books of Jack, isn't it? Oh, sorry, in the books of Jill. In the books of Jill Mumbai. What are the ledgers that they've asked? They've asked for consignment account. Consignment account. Particulars, amount, particulars, amount. So ledger format will be yes, Gautam. We'll do one. I don't know if it is there in this particular two questions that I've selected. If it is not there, we'll see what can be done about it. Okay. Okay, guys. Consignment account. And we need to prepare one more ledger as they've asked. What is the other ledger? They've asked us to prepare Jack account. Mr. Jack account. Okay. Come on. Let us start reading the question. At invoice price. So they're doing the transactions at what price? Invoice price. When they do it at invoice price, we'll have load in this problem. There is load. We need to remove the load on transactions. Okay. Jack is entitled to commission at 5% on sales at invoice price. 5% on sales at invoice price. 20% surplus. Okay. There are two commissions in this question. One is ordinary commission and overhead commission. Ordinary and overhead. There is ordinary commission and overhead commission. Goods costing 1 lakh were consigned to Chennai at invoice price of 1,50,000. Okay. So when the goods are sent on consignment, the consignment stock value is increasing. Consignment account should be debited because consignment is increasing, and the credit should be given to goods sent on consignment because goods are real accounts. Goods are assets. They are going out. Credit. So the journal entry is consignment account debit to goods sent on consignment account. I'll repeat, what is the entry? Consignment account debit to goods sent on consignment account. Consignment account debit to goods sent on consignment. When I do this chapter in the class, I make people write journal entry when I do the ledger, and later I let them copy ledger so that they'll be very clear with journal as well as ledger for this chapter. When you learn journal entries correctly, you will be having very good hold on the ledger postings. So in a normal class, what do we do? When I'm preparing the ledger, students will be writing journal entries. After I prepare the ledger, they copy the ledger account. Okay. Goods and on consignment. What is the value of the goods? 1,50,000 invoice price. 1,50,000. But consignment account, everything should be at cost. 1,50,000 is invoice price. How do I remove the load on this? I would write something on the credit side. What will I write? By load on, or I can write goods and on consignment account. Goods. The bracket will write load. How much is the load? They only told cost is 1 lakh, selling price, sorry, invoice price 1,50,000. The difference between them is load, isn't it? I told you here. Have a look. Where did I mention? Did I mention here? Cost price plus load is equal to invoice price. Cost is 1 lakh, invoice price 1,50,000. Difference of 50,000 is load. So 50,000 is load. 50,000 is load. You guys get that? Okay, come on. Let us go ahead after this. Okay, what have they told after that? Direct expenses of consignor amounted to 10,000. When the consignor incurs the expenditure, consignment stock value will increase. Any expenditure incurred, consignment account has to be debited. Any expenditure incurred has to be debited to consignment account. So consignment account debit to cash account or bank account. Why? It is consignor's expense. Yeah, consignor's expense. So I'll basically write it to consignor's account. Expense. This is non-selling expense, guys. All the expenses incurred by consignor are non-selling expenses. How much? Expense is technically 10,000. Okay, next. On 31st of March 2008, an account sales, I told you know, along with the remaining goods and the cash, they send this account sales. Account sales was received by Mr. Jill from Mr. Jack. Okay. From Mr. Jack, that he had affected sales of 1,20,000. Sales is 1,20,000. With regard to 1,20,000 sales, consignee would have collected the cash. So usual journal entry for sales is cash account debit to sales account. Here you will not write sales, you will write consignment. It will become cash to consignment. You will not write cash because consignor has not received cash. Cash has been received by consignee. Consignee has to later transfer it to the consignor. So I will write journal entry would be consignee account debit to consignment account. What is the journal entry for sales? Consignee account debit to consignment account. So I'll write here by consignee because consignee has to pay us money. Oh, sorry. What is the name of the consignee in this case? Jack. Jack. Okay. How much? Sales is 1,20,000. Okay. He has told that he sold 1/4 of the goods. Have a look. He has sold 4/5 in respect of 4/5 quantity received by him. So listen. Goods sent. Goods sold. Okay. How much is the goods sent? 1,50,000. 1,50,000. How much is the goods sold? 1,20,000. This is 1 by 1. Get that? Yeah. Still it's coming like this. Okay, this is 1. Just 1. This is 1. And this is 1 by, no, not 1 by 5. 4 by 5, no? 4 by 5. 4 by 5. Okay, 4/5. 4 and 1a. Does this take now? 5. Still goes like this. Amma, finally. It's 4 by 5. Actually speaking also, if there is a difference, there will be surplus. Now is there a surplus? Let us compute. 1 lakh 50 into 1. 1 lakh 50 into 4 by 5 is how much? 1 lakh 50,000 into 4 by 5. 1 lakh 50,000 into 4 divided by 5. How much do you get? Calculator. 1 lakh 50,000 into 4 divided by 5. That comes to 1 lakh 20,000. So what is the conclusion? Conclusion, there is no surplus. There is no surplus. If you had sold for 1 lakh 30, then you should have sold 1 lakh 20,000 worth goods are sold for 1 lakh 30, there would be 10,000 surplus. In this case, what is happening? 1 lakh 20,000 is the invoice price, 1 lakh 20,000 is the sale price. Is there any surplus? There is no surplus. So, no overriding commission. There is no concept of overriding commission in this question. Did you get this? Meaning he is eligible to, but there is a provision for overriding commission, but he is not eligible to take that overriding commission now. Okay, sales done. Next, he is actually expenses for 3,000. Expenses incurred by Jack for 3,000. So I'll write to Jack account. To Jack account. What is this? Consignee's expense. What is it? Have they told it's non-selling or selling? Oh, nothing mentioned. So we'll consider it as non-selling expense. Sir, is that the common protocol? Yes. If nothing is mentioned, an expense is non-selling expense. Sir, when will it be selling expense? They would have to mention. They would have to mention. If nothing is mentioned, it is non-selling expense. Okay, done. We have written by Jack to Jack. It has to be posted to Jack account. So what will I write in Jack account? I'll write to consignment account. What is it? Is expenses. How much is it? 3,000. Similarly, I would have to write by consignment because he has to pay no because of consignment. What is it? Sales. Sales money he has to pay. How much is it? Sales money? 1,20,000 he has to pay. Next, we would have to compute his commission. Working note 1. Okay, come on, working note 1. Let us do working note number 1. How much is the commission? Commission they've given in the question 5%. Okay, 5%. 5% of sales at invoice price. Okay, how much is invoice price for sales? 1,20,000. So I'll write 1,20,000 multiplied by 5%. Sir, when will you take, please? I didn't understand. When will you take PSR? 5%. 6,000. What about overriding commission? How much commission on surplus? 20% on surplus. Surplus 0 multiplied by 20%. You will get 0. You guys get that? Total commission is how much? 6,000. Did you understand how? There is no surplus. Why I calculate here? No, there is no surplus. There is no overriding commission. I have done it. So my working note number 1, 6,000 is my commission. Done. Perfect. I have written to Jack account. So here I'll write to consignment account. Sorry, I would have to write. Ayyo. You guys didn't tell me. I made a mistake here. 2 and by. Consignment account. What exactly is it? COMMISSION. Commission. How much? 6,000 rupees. I've interchanged. Oh no, that buy and two only, right? Partnership as PS. Oh, I don't know. Partnership after the special transaction. So tomorrow it will be partnership in PO and company accounts. Tomorrow we'll finish this part. Special transactions. Okay, guys, did you understand? Next, what else is there? That's it, isn't it? Yeah, we would have to compute. What have they told? Mr. Jack accepted a bill drawn by Jill for rupees 1 lakh and remitted the balance due in cash. So he gave bill. So it is by bills receivable here. Why? You are receiving a bill. When you receive a bill, bills receivable account debit. To whom? To the person who's giving the bill. So who's giving the bill here? Jack. So bills receivable account debit to Jack account. Now we'd have to find the total. You have an interchanged Jack account, something wrong? Yes. Okay. Now tell me, what is the balance carried on? Balance is paid by cash, isn't it? Balance is by cash account. Why? You are receiving so much cash. So cash account should be debited. Who's giving the cash? Mr. Jack. Is equal to minus you will get 11,000. 11,000 is the balance in figure. I've corrected it. I corrected it. Is that fine now? That is balance in figure. Then, how about here? This would have to close. There are two items missing here. Number one is I would have to write my closing stock. Then I would have to remove the load on closing stock. Then I'll get profit. So I'll write now by balance carried on. What is this? Closing stock. Very, very simple. What is the value of the goods? 1,50,000. 50,000. And I would have to include the expenses that I've incurred with regard to non-selling expenses. How much is the non-selling expense incurred? 10,000. And next, along with that, 3,000 is also non-selling expense incurred. Yes. This is the total value of the stock. This is for what? For total goods. How much is sold? Of which 4 by 5th is sold. Closing stock is 1 by 5 of how much is that? 1,50,000 plus 10,000, 1,60,000, 1,63,000. Does that make sense? I've written explanation, guys. I'm not just writing the answer. 1,63,000 divided by 5. It gives me 32,600. Do you guys agree with me? 32,600 is the value of my inventory. 32,000 is the closing stock. Now, 32,000 closing stock is at invoice price. This is at invoice price. At invoice price. So what is that I have to do? I have to remove load. How do I remove load? I have to write to stock reserve. Don't forget the name. You would have to write stock reserve for opening and closing balance. Yeah. Load on closing stock. How do we find it? Now, for 1,50,000, it is 50,000. For 1,50,000 worth goods, it is 50,000. Now, how much of it is sold out of 1 lakh? Well, for 450 is sold, 150 is remaining. You get that? So, you would have to find it substantial. Okay, I'll do it with the help of a working note. I can write it here, but the columns are less. If I have to write it straight away, I'll write 50,000 multiplied by 1 by 5. This 50,000 load is there, no? This is for entire goods, out of which 150 is remaining. So, it should come to 10,000. That is straight answer. But I can actually do working note or working note number 2. Working note number 2. Load on closing stock. How do I do it? Have a look. Invoice price. LOAD. Load. Goods sent. Okay. Goods sent is 1,50,000 invoice price. Load is how much? 50,000. Correct alva. Now closing stock. 1 divided by 5, 1/5 of 1,50,000. How did I get 1/5? 4/5 is sold. That is like, okay, 1/5. 1 by 5 is equal to 1 minus 4 by 5. You do that. You will understand. Once you get 1/5. 1/5. 1/5 is how much? 1/5. 1/5. 1,50,000 divided by 5. That gives me 30,000. Okay. Now you need to just apply the logic. You can either write it like a ratio proportion. You guys remember? Product ends of product. Product of ends is equal to product of means. Or you can do something like, okay fine, ಇಷ್ಟಕ್ಕೆ ಇಷ್ಟ ಆದ್ರೆ ಇಷ್ಟಕ್ಕೆ ಎಷ್ಟು, ಯಾ ಈತಕ್ಕೆ ಈತಾಂಡ ಈತಕ್ಕೆ ಈತ, ಯಾ ಅಕ್ಕ ಕಿತ್ಲ ಜಲ ತಕ್ಕ ಕಿತ್ಲೆ, ಇಂತಕ್ಕೆ ಇಂತ ಐತೆ ಇಂತಕ್ಕೆ ಎಂತ, ಯಾ इतने में इतना तो इतने में कितना, ಯಾ ಈತಕ್ಕೆ ಈತಾಂಡ ಇದಕ್ಕೆ, ದಟ್ ಇಸ್ ಓನ್ ತಮಿಳ್ ಎಡಿಟಿಂಗ್. ಇವಳಕ್ಕೋ ಇವಳೋನ ಇವಳಕ್ಕೋ ಎವಳೋ, ಯು ಕ್ಯಾನ್ ಡೂ ಲೈಕ್ ದಟ್. ವಾಟ್ ಯು ಡೂ? 30,000 multiplied by 50,000 divided by 1,50,000. You will get 10,000. That is the answer. You guys get that? Stock reserve of 10,000. You can write like this with the help of this working note. That is taking the stock. Or stock reserve, or what is a load on the entire stock is 50,000. Out of that, 450 is sold. What is remaining? 1/5. For 1/5, it is 10,000. Simple. You can write it this way also. It will end up being the same thing. Okay, guys. Next, all you need to do is find the profit. We'll total it. Shall we? 1,79,000 is the total on the debit. 2,02,600 is on the credit. So I'll find the profit balance figure here. 2,02,600 minus sum that is there above. How much will I get? 23,600. What is this? It is consignment profit. You guys get that? That's it. We're done with the answer. We're done with the answer. If you want to have a look at the entire answer at once. If you want to have a look at the entire answer at once. I'm showing it to you now. Yeah, you guys can copy if you want. Yes. Shall we go to the next question? Anyone has any doubts with regard to this question? Please drop a text. If you have doubts regard to any of the questions that we did today, please, we say this question. If you have doubts with regard to this question, please drop a text. I hope not. Shall we go to next one? So we have another question on consignment. Mr. E of Assam. Should I solve this or shall I just tick, tick, tick? Shall I show the answer or solve the answer? Respond. It's bad. Taste is pathetic. Can't help. Yesterday, students gave me a lot of suggestions. Sir, please add honey, ginger, and turmeric powder, and jeera. Lot of things they told to hot water. Even I don't know what and all is. Whatever is possible, I just put it into hot water and then trying to drink it. No, just show. Just show the answer and explain. Okay, guys, come on. Let us do that. Okay, now I'm starting with question number 15. I'm not able to find it. Just a moment. A of Assam. This is the Jill question that we just solved. There's one more question. Green. Manoj of Noida. This Manoj of Noida question has been repeatedly asked. Gagan Kumar Chennai, is it the same question? No, it is not. DVD player, no. So many times this question is asked, man. Manoj. Finally we found it. Yes, here it is. This is the question that we're solving now. 9A. Oh, it was just above. Acha, acha. Okay, I'll solve 9A. Concentrate. Have a look. Mr. A of Assam sent. So Mr. A is consigner. Mr. A is consigner and is sending how many on consignment? 1000 DVD players to Mr. B of rupees 100 each. So 1000 into 100 is the goods sent on consignment. So how much is the goods sent on consignment? 1000 into 100. So on the debit side in the consignment account, this should be 1000 into 100. Have a look. On the debit side in the consignment account, 1000 into 100. Consignment account. Goods sent on consignment account. Consignment account debit to goods sent on consignment. How much? 1000. Did you understand this? Okay, that's the first entry. That's the first entry that we should do. Next thing that we should do is 1500 were the expenses made by consigner. 1500 you would have to write to cash account because it is the expense of consigner. 1500 account should be debit in the consignment account. Have a look. Consignment account 1500 debit to cash or bank. Next one. Then we spent 3000 for clearance and selling expense 20 per DVD player. So 3000 rupees is to be written in the debit side as B account. 3000 rupees has to be written on the debit side as not cash account. It should be written as consignment account debit to B's account. And further, he is incurring 20 rupees per DVD player sold. How many DVD players are sold? I'll read it further. B sold 600 DVD players on 15th March. 20th March, he sold 300. So totally, he sold 900 DVDs. Sales is how many DVDs? Ayya. So the expense is 3000 plus 20 into 900. I'll show 20 into 900 is 18,000. So 18,000 and 3,000 is the expenses. Would have to write consignment account debit to B's account 3,000 and 18,000. 3,000 and 18,000. Let us see. 3,000 and 18,000. See 3,000 clearance charges. This is non-selling expense. 18,000 selling expense. So this is non-selling expense. This is also non-selling expense. These two will be considered in computation of closing stock. However, 18,000 will not be considered in computation of closing stock. Come on, let us go to the next one. Okay, they have told 600 DVD players at 160, 300 DVD players at 170. So I will find the total sales. 600 into 160, I will add it to my memory. Then 300 multiplied by 170, I'll add it to my memory. If I recall the memory, it is 1,47,000. 1,47,000 is the total sales. You get that? 1,47,000 is the total sales. So I would have to write 1,47,000 in the credit side. So they have not written 1,47,000, they have written 96,000, 51,000. So total comes to 1,47,000. They have written separately to both the sales. It is written in by B's account because the journal entry for sales is B's account debit to consignment account. What is the journal entry for sale? B's account debit to consignment account. Now, what we need to note here is, here we wrote by B, here you wrote by B, here you wrote by B. This has to be posted to B's account. Have a look. In the B account, you wrote sales 96 and 51. You wrote clearance charges 3,000. You wrote selling expenses 18,000. Commission we have not yet read. I can mark it straight now, but I'm trying to tell you how does it work. Yeah, it is not yet. We have not yet read that part of the question. Come on, let us read the question further. Next, B is entitled to a commission of 25 per DVD sold plus 1/4 of the amount by which gross sale proceeds exceeds total commission thereon exceeded by a sum calculated at 125 per DVD player sold. Very long English statement. No, it's actually very easy. I'll show you this working mode. This kind of a statement can come in the exam. Very easy. Don't break your head. Don't break your head. मैं दिखाऊंगा, मैं हूं ना. Don't worry. किसका है तुमको इंतजार में हूं ना. Okay, commission is equal to, how much is the commission that they've told? Commission is equal to 25 per DVD sold. Okay, 25 per DVD sold plus, what is it told after that? Plus 1/4 of the amount. Okay, concentrate. Guys, I can straight away show the answer, but I'm solving this because it's important. Yeah, 1/4 of the amount of what? Gross sale proceeds. I'm focusing on one word at a time. One word at a time. Okay. Don't read the entire sentence and then get frustrated. One word at a time. Concentrate. Gross sale. Okay, this is not visible only. Gross sale proceeds. How much is gross sale proceeds? Gross sale proceeds is that 1,47,000, isn't it? Yeah, 600 into 160 plus 300 into 170. That is 1,47,000. 600 into 160 plus 300 into 170. Totally 1,47,000. That is gross sale proceeds. 1,47,000. Or should I read gross sale proceeds? Gross sale proceeds. Further, what they've told? Less total commission. Okay, minus total commission. Minus less total commission. Thereon exceeded a sum. Exceeded means again sum might say minus only. 125 per DVD sold. How much is 125 per DVD sold? 125 per DVD sold. How many DVDs are sold? 900 DVDs are sold. This is the statement. I have not done anything superb. What I have done is the same thing what they have given in English, I have converted to mathematics. Okay, this is total commission. What is this? Total commission. Okay, come on. Let us solve this total commission once again. Total commission 25 per DVD sold. So can I write 25 multiplied by 900? 25 per DVD sold. Can I write as 25 plus 900? 25 multiplied by 900. Then this I'll write 1 divided by 4 multiplied by gross sale proceeds is how much? 1,47,000 minus total commission. Even I don't know. Total commission only I'll write. Minus 125 per DVD sold. Can I write as 125 multiplied by 900? Yes, same thing. I'm solving it at a very slow pace so that you will not get any doubts. Now tell me how much is 25 into 900? 25 into 900 gives me 25 into 900 gives me 22,500. 22,500 plus what is this? This I'll write like this, like that only. 1 by 4 in the bracket. 1,47,000 minus, I'll write total commission as TC minus how much is 125 to 900? 125 to 900. That gives me 1,12,500. 1,12,500. Okay. Next, total commission is equal to, now 22,500 I'll write like that only. What I'll do? 22,500 I'll write like that only. Now I'll open up that bracket. Shall I open up that bracket? 1/4 of 1,47,000. So 1,47,000. 1,47,000 divided by 4. That gives 36,750. So I'll write 36,750 minus 1 by 4 is 0.25. So can I write 0.25 total commission minus how much is 1,12,500 divided by 4? 1,12,500 divided by 4. I'll get 28,125. 28,125. Done. Okay. Again, total commission. Total commission is equal to how much? Now add items. I'll add. We have 22,500 plus 36,750 minus 28,125. I'll repeat. We have 22,500 plus 36,750 minus 28,125. That gives me 31,125 positive. So I'll write here 31,125 minus 0.25 total commission. Done. If I transfer this to the other side, it becomes TC plus 0.25 TC is equal to 31,125. So then what will happen? TC plus 1.25 TC will become 1.25 TC is equal to 31,125. Next what will happen? TC will be equal to, I'll send it this side, 31,125 divided by 1.25. You guys get that? Then total commission TC is equal to what? This is equal to 31,125 divided by 1.25. That gives me 24,900. 24,900 is my commission. 24,900 is my total commission. Did you guys understand this? It is simple solving of equation. You have to just solve this equation and you'll get the answer. So we're doing question number 15. Question number 15, commission computation. 24,900. That's the commission. Now 24,900. Look what they would have written here. 24,900. It is expense. It is expense. It is to be payable to B. Consignment account debit to B account is the statement. So I'll write 24,900 here. In B's account, it will be written on the credit by consignment 24,900. 24,900. Did you understand the answer? I could have just shown 24,900. I think there is working note here as well. See, here also there is working note, but I did it so that you guys will understand. Okay, it was tricky. I agree. It was not easy. Done. So then that's it. Now we have to find the closing stock and then find the profit. That's it. Yeah, B sent due to A on 30th June. Whatever is the balancing figure in consignee account will be balancing figure. That will be cash paid. So this is the balancing figure. Balancing figure. Rest everything is marked. All you need to do is find the value of the closing stock. How do we find it? You sent how many DVDs? You sent 1,000 DVDs, isn't it? How many DVDs were sent? 1,000 DVDs were sent. Out of that, how many were sold? 900. 600 plus 300, 900 was sold. Remaining 100 DVDs ka value you should find. Yeah, 1 lakh plus 1,500 plus 3,000. 1 lakh plus 1,500 plus 3,000 into 100 by 900. So I'll tell you, 1 lakh is the value of the goods sent plus 1,500 is the value of non-selling expense plus 3,000. Totally 1,04,500 is the non-selling expenses plus the goods. Do you agree with me? Out of that, this is for 1,000 DVDs. Out of this, 900 are sold. So we have to find for 100. So I'll multiply this by 100, divide this by 1,000. My closing stock should be 10,450. Have a look, 10,450. Got it. For those of you who didn't understand, what I did is 1 lakh is the cost of the goods plus 1,500 expenditure non-selling expense plus 3,000 non-selling expense. Total cost of the goods comes down to 1,04,500. This 1,04,500 is the cost of the goods relating to 1,000 DVDs. Out of this, 600 DVDs and 300 DVDs were sold. So 900 DVDs are sold. What is remaining is 100 DVDs. So I will divide this by 1,000 because it belongs to 100. Okay, I'll multiply it by 100, divide it by 1,000. I'll get the value of 100 DVDs. That is 10,450. That is the value of my closing stock. Done. They would have done a working note for the same. Done. And ultimately will arrive at the profit or loss on account. profit or loss account, profit transferred to P&L account. That's it. See, they've done the working note here. Whatever the working note they've done here, I summarized it to you then in simple terms. Yeah. In fact, if you want, I can do the entire problem of consignment on a calculator and then tell you the answer. Use a little bit of brain to remember a few things. Use the calculator a few things and then do it. But the examination is not about writing the correct profit or closing stock. You would have to do everything, and these working notes form part of the answer. Done. Now have a look. Let me know if you have a doubt. Let me know if you have a doubt. Please drop a text. Drop a text if you have a doubt in 9A. Yes, it is mandatory to write the dates. When the dates are given, you have to write dates. And Shreya is asking, you can use A/C standard shortcut, but when you use A/C, don't write small a, always write capital A. Always write capital A. That A/C is a standard shortcut, allowed. You need not write ACCOUNT. You can write A/C. Both inside the ledger and heading. Here you can write consignment ACCOUNT, or you can write consignment A/C. Here also A/C is allowed. Everywhere A/C is allowed. Shall I take you to next topic? Guys, next topic. Shall we go ahead? Give me a thumbs up. Let me know. Shall we go to next topic? No one's responding. So I think you guys are done. I'm taking you guys to next topic. The next topic that we have is unit number 4, average due date. What is unit number 4? Average due date. Okay, come on. Let's go to average due date. What to expect in the examination from this chapter? Problems on determination of average due date. Problems on computation of interest using average due date. Checking that payment date and then average date difference and then identifying interest. Ledger folio not mandatory. Ledger folio you can skip. You can skip ledger folio. Cash book you prepare ledger folio. In the cash account you always prepare ledger folio. You would have to write C in that contra. But other things you can skip. Okay. And they can ask you to compute the savings in interest or payments of interest. So that interest expense and interest savings. Hey, just the computation of average rate is not this chapter. Application of average rate is very important. Where do you apply and how do you apply the concept of average rate? That will be tested in the exam. Only computation of average rate will not get more marks. Calculating the average rate and computing interest for the same. Calculating the average rate to compute savings of the interest for the same. Computing the average rate, and from there you're trying to identify the date of payment. All that will fetch marks. Okay. Then next we have interest computation in the bank. That you remember you would have done one problem, Pala Subramaniam problem you might have done, or there's one problem where you would have to do that ledger account every day balance you'll find and then do current account cutting, that one. And then interest in partnership. In the case of partnership also, to compute interest on capital we can use average due date concept. Okay. Next, weightage, it is 15 to 20% for entire chapter 6. That is consignment, bills of exchange, goods sent or return or approval, average due and account current, everything put together. So observation wise you can say it's 8 marks. Like there are a couple of true or false questions that can come, or one true or false question, one 6 marker, or only one 8 marker. Usually 6 marks will come, not 8, 6, 4, 5 or 6. If they ask sub questions like how much is the savings of interest, how much, when should we pay to save interest. If they tell all that, then it will come for a 6 marker. If not, usually 4 or 5 marker. Okay. Important topics to revise. Computation of average rate under various methods. Your interest table method, product method, as well as product of balance method. Read all 3. See, I know that it is always easier. I know that it is always easier to do it under which method? Product method. But that doesn't mean you ignore this method. Okay, guys. So this is easy. But don't ignore interest table method. Okay. If they don't mention anything in the question, okay, default we go by this one. If they don't mention anything in the question, we do it under product method because it is easy and it will save time. Firstly, it is easy. Secondly, it will save time. I know. Yeah, even that would have been told to you in the class also. It is easy to do. It will save time. Yeah, but if they've clearly mentioned interest table method in the question, that has not so far not happened in the examination. But if they mention clearly and ask you to do it under interest table method, please do it under interest table method. If nothing is mentioned in the question, then you can do it under product method. Nobody is going to stop you. And product of balance method, it might not be there in the material quite often. There are only hardly 1-2 problems. and that does not decrease the importance of this topic at all. Equally important, this topic can come for the examination. Previously, this was there in CA Inter. I mean, it's a CA IPCC, it was there. Average due date, account current, both the chapters. Now it's been put to CA Foundation. So nice. So savings in interest and payments of interest will be questioned. And I forgot to mention this. Under this, they can ask you that epoch method also. Epoch method is that ulta method. Don't skip epoch method. Don't skip epoch. Lot of students know average due date means they will do, but they wouldn't know that epoch method. Please practice in that epoch method also. Oh, epoch method. Shit, man. What am I telling? I'm telling it with regard to account current. Sorry. Yeah. Okay. That's the reason I didn't put it here. I would have to put it there. Then straight away, what is average due date? What is average due date? Anyone with the answer? What is average due date? What is average due date? Are you guys answering? Come on, answer. What is it? It is the mean date. Yeah, average date. As the name says, average. It's like this. I have to make several payments on several days. I have to make several payments on several days. I need to find one day, which is average of all the due dates. I need to pay some money to you on 10th of December, some money to you on 15th, some money to you on 20th, some money to you on 30th. I don't want to make so many payments. I want to make one payment. I want to make one payment on one date. This should not lead to loss to me, nor should it make income to me. If I pay you in early, it is my, if you pay in advance to you, it's my loss. If I pay you late, it's expense, because again I would have to pay expense. Interest I should pay. So I don't want to pay any interest, nor do I want to receive any interest. So I want to find the average of my due dates. I want to find the average of my due dates. But this should be in proportion to the amounts. You get that? You would receive interest in one case, you would pay interest in one case, it will nullify to make it look like there is no interest. That is the concept of average due date. It is the mean date. It is the average of all the due dates. Yeah. Neither there is profit or loss on settlement. Neither there is interest payable nor there is interest receivable on the settlement. That is average due date. Okay. There are two things: date of payment and average due date. Now, if the date of payment is average due date, then there is no interest. That's what I don't know. If you settle it on that day, there would be no interest. If you settle it on that day, there would be no interest. If date of payment is average due date, there will be no interest. There will be no interest. But if you pay after, if the date of payment is after average due date, interest expense would be there. If date of payment is after average due date, there would be interest expense. If date of payment is before average due date, there would be savings in interest. So if you pay after average due date, you have to pay with interest. If you pay before average due date, you would have to receive interest. So in order to save interest, when should you pay? Before average due date. In order to save interest, when should you pay? Before average due date. In order to incur expenditure, when should you pay? After average due date. When would you pay? After average due date. Okay, that's with respect to the basic part. Then methods of computing average due date. There are multiple methods. What are the methods? When the transactions are very few, we we follow interest tables method. What do we follow? Interest tables method. When the transactions are many, we follow product method. When the transactions are many, we follow product method. If the transactions are too many, we follow product of balance method. This is usually in the case of banks. Bank account, what do? We follow product of balance method. Banks compute interest under product of balance method. Product method can be used in partnership or normal trade. If it is very simple trade transactions, hardly any transactions, then we can go by interest table method only. Meaning we'll find interest for each transaction. You guys get that? Yes or no? Okay. Then I've put in a question. I wanted to type that okay, when to start, where to start counting from, till where to count and everything, but couldn't really pull out time. So I put one question. Now you guys tell me, should I solve this question in the Excel sheet or should I show the answer and explain? I prefer solving it so that I can explain a couple of concepts around it. But you guys tell me, how do you want it? But I prefer finishing this topic today, average rate and account current, so that we'll have time tomorrow for final accounts, partnership, company accounts, and NPO. What do I do? Tomorrow I want to do final accounts, partnership, company accounts, and what else is there? NPO. We'll do that tomorrow. With regard to this, tell me now, what do I do? Show, answer, and explain. Hmm. Okay, let me find this first. 2 months. Yes, here is the question. Have a look. So this data comes from question. Which data? This much data comes from the question. Now, after you write this data, you would have to firstly find the due dates. If the due date is given, we follow due date. If the due date is not given, then we consider date of pay. So here they've given due dates. We'd have to compute. Though they've mentioned it as due date, it is actually maturity date. They've actually mentioned it as due date, but it actually is maturity date. How do we find it? 1st of March plus 2 days, 2 months. So March is April, May. You add 2 months, it will become May. For 1, you add 3. So 1 plus 3, 4. 2 plus 3, 5. Date is 1, you add 3 grace days, it will become 4. Month, March is 3, you add 2 months, it becomes 5. 4th of May. Done. So you understood. We'll see the rest of it later, but we'll first identify due dates. Then 10th of March is 3 months. 10th plus 3 days, 3 grace days, it will become 13th. What to say, March is 3rd month, plus 3, 6th month, June. Done. 5th of April, say 2 months. 5th plus 3 days, 8 days, 8th. Then April is 4th month, plus 3 months, it will become 7th month. 7th month is July. So 7th month is June. January, February, March, April, May, June. 6th month. 2 months, no, 6th month. 4 plus 2, 6. Next, 23rd April, say 1 month. So 23rd April, first 23 plus 3, 26. Then 1 month to April is May. 10th May, say 2 months. 10 plus 3, 13. And then May, June, July. 2 months, July. So dates we got. Then we'll take the amounts. This is given in the question. This is again given in the question. We need to take the base date. We need to take the base date. One of the days as base. We need to start taking the earliest due date as the base date. Sir, can we take a date other than the earliest due date as the base date? Yes, you can. Yes, you can. Usually people prefer taking the date which is more common as the base date. So that more items will become zero, the product will become zero, calculation will become simple. I would tell you always take the earliest due date as base date. I have my reason. Sir, is it wrong to take any other date as base date? Not at all wrong. It is completely your choice. Your answers will always be correct. Your answers will always be correct irrespective of what you take as base date. What people usually do, every other faculty and every other student I've seen is they take whatever the dates are there very close. 2 dates are same. They take that date as due date. So that base date will become 0. No, 2 items will become 0. Product will become 0 for 2 items and then total will be less. They do that. They do that. I would suggest you not to do that. I would tell you to take earliest due date as base date. The question is, sir, why are you insisting on earliest due date as base date? Two reasons. Two reasons. Reason number one. Reason number one. Reason number one is very simple. When you take any day other than the earliest due date, when you take any day other than the earliest due date, you would have negative items in the number of days column. You would have negative item in the number of days column. When you have negative item, the product will be negative. The product will be negative. And ultimately, the computation time will take more time. Plus, minus, plus, minus is that. Secondly, you might by mistake forgot to write minus. In the examination pressure, panic mode, this might so happen that you might treat a minus item as plus or plus item as minus. That would lead to disaster and would spoil your entire answer. I am not trying to scare you. I am trying to tell you reduce the probability of doing mistakes. Reduce the probability of doing mistakes. Keep everything positive. Start with the earliest due date as base date. Reason number one. Reason number one. Reason number two. See, when you're doing it in the calculator, it takes the same amount of time. If you have to do it manually, then multiplication will be difficult, easy, zero will be easy and all. But when you're doing it in the calculator, no, guys, So whether two dates are 0, one date is 0, it would take the same time. It would take the same time. So I would suggest you not to take any other date. Third and most important reason is you check any problem in ICAI material. You check any problem in ICAI material. Any revision test paper issued by ICAI. Any mock test paper issued by ICAI. Any suggested answer issued by ICAI. ICAI always takes earliest base date as due date. So earliest due date as base date. So you do that. I'll tell you why. Now I am correcting your answer paper. Assume that I am an evaluator. I get your answer paper. I look at this. I want things to match. But end answer might be same. You shouldn't trouble the evaluator. If you can give him some comfort, give it to him. If you can match line to line with ICAI material, write it. Your ultimate objective should be to write the answer which is closest to the suggested answers. Should write your answer which is closest to the suggested answer issued by ICAI. Closest possible. Do you know how to write it closest? Yes. What? Taking the earliest due date as base date. So what will you do? Take the earliest due date as base date. Having said this, now you people will still ask, sir, I want to take some other date. Take it. Will it change the answer? No. Will it make the answer wrong? No. Am I going to stop you? No. I told you my personal choice. Okay. Sir, in one of the sum in IC material, they've taken base date from the date of bill column, but the base date should have been taken from due date column. It might be some mistake, man. Akshay, some mistake. Or in that, for that particular transaction, if there is no due date, if there is no due date, then the date of bill only will be due date. If it is a transaction and there is no due date, then the date of transaction will always itself be the maturity date or due date. You get that? And I mentioned very clearly, though they tell you a due date, they mean maturity date. But they write due date. Yeah, that's something that's there. Can't help. Okay, what do you do? Here you take 0. Why? Base dates will be 0. After that, what do? You will count the days from the base date to the next date of transaction. In counting this, the first day is not counted. But say when you count from 4th May to 6th June, 4th May to 13th June, 4th May is not counted. You would start counting from 5th May. But 13th June, is it counted? Yes. The base date is not counted. Day after the base date is where you start counting. But that due date, 13th June, is counted. You get that? So what I'm trying to tell is 4th is not counted. 13th is counted. Lot of them have this doubt. Sir, which one to include? 4th is not counted, 13th is included. You cannot take both. Or in simple sense, you might have learned it like, okay, take one of the days. Okay, but I would tell you, don't count 4th. Start counting from 5th till 13th. Okay, done. So these days you will count and then you will multiply. You would get this product. So this is the product. Here you multiply it by this days, but this is not days. This is actually years. Sorry, these days. Okay. When you identify the interest or when you have to identify this particular thing, this you would have to divide by the total amount. Amount is how much? 70,150. The formula goes like base date plus days equal to total product by total amount. And another important point here. What did you get here? The answer that you got is how many days do you get? 35. Do you get exact 35? No, I don't think so. 6,22,500 divided by 17,750. You get 35.07. No, God, this they've done messed it up. Okay. Now, usually I'll tell you how to do the rounding off. Now, just assume the rounding off, or to say the product divided by amount came to 10.34. Now, how many days will you consider this as? 10.34 is how many days? Should I count it as 10 or should I round it down or round it up? Rounding is not something which is very complicated. It is rounding down, rounding up. Rounding down means 10.34 is 10. Rounding up is 10.34 is 11. You tell me, 10.34 should be considered as 10 or 11? 10.34 should be counted as 10 or 11? 10.34 should be counted as 10 or 11? Answer. 11 days, very good. 10 days, no, you should take it as 11. Why? It means to say that the average due date is 10.34 days after the base date, 4th May. After 4th May, you count 10.34 days. Then if you pay, you need not pay any interest. That's the concept. 10.34 days means 10 full days plus 0.34 of the next day. Next day we'll have 24 hours. 24 hours into 0.34 is 8. Next day after 12 o'clock you will count 8 hours. Morning 8 o'clock you should pay. 0.04 into 24 you will find. It will come down to some 24 minutes. So exactly 8 o'clock 23 minutes you should pay. Do we count time and all or do we just count the date? We just count the date. So always we should round it off to the next number. Round up, not round down. Round up. Round up to the next date. Round up to the next date. Even if it is 10.1, take 11. Even if it is 10.1, take 11. You guys get that? That's how we do it. This is product method. This is, sorry, what have I done? Product method, interest table method comes in account current. I put it wrong. Sorry, there is only one thing. That interest table method, account current, it all comes in account current. I did it up in the midnight, man. So I messed it up. So not to worry. Average do it, this is how we do it. You guys get that? Here, when I mentioned it wrong. Yeah. This is wrong. This is wrong. Don't worry. This is all correct, but this is with respect to account current. Account current. Okay, sorry. Account current. Hmm. It is not about less than 0.5. It's always like round it up to next number. Days it is. It is not amount. It is days. So that's with respect to this one. Then account current. Shall we revise account current now? Shall we do this? Shall we do this account current? These two are little easier topics. If we are ready to spare next 5 minutes, I'll quickly revise account current so that we'll have only final accounts, partnership and company accounts NPO for tomorrow. Shall I? Give me a thumbs up. Let us do this, guys. Let us finish off account current. Let us finish off account current. Shall I? This is wrong again. Okay, what to expect from this chapter? In this chapter, they can give you questions on computation of account current under yeah, they can give you preparation of account current under interest table method, product method, and production, or to say product of balance method. They can give you computation of account current based on interest table method, product method, and balance of product method. Balance of product method is that bank account ka problem that I told. And say I messed this up. I put that average rate ka thing only here. Yeah, and then we'd have to compute interest. There is one small concept called as red ink interest. That's there here. Yes, Aditya. You are right. Yeah, red ink interest is only one important concept that you need to revise along with this. Yeah, then I put a question here. Or can I do one thing? Shall I leave you with this chapter? Will you guys try this chapter and then ask me if you have doubts tomorrow? Yeah, average account current are simple ones, no? Shall I leave you with this? Will you guys ask me for the doubts if you have any on account current? Tomorrow I'll start the class and then run you through final accounts, partnership, company accounts, and NPO. And at the end, if you have doubts on account current, I'll take it. Is that fine? Is that fine, guys? Shall we do that? Give me thumbs up. Sorry for that last part. I think I first made account current table and then I put it there. So I put this one there and it became like that. And just because it was there, when I got carried away and it told, it's taking a toll on my body. Yeah. Fine, guys. So that's it for today. Tomorrow when we start our class, we'll start with final accounts of sole proprietors. We'll quickly revise all the topics. We'll just check one problem, have a look, and then see it. How does it work? Then after we do final accounts, we'll do partnership. You people have been asking me to do JLP in detail. Yes, yeah, manufacturing entity and non-manufacturing entity both together. Yeah, we'll do that JLP part also in detail. The way I explained this thing to you here, you remember? We did it in detail, no? Here, consignment ka. Something similarly, we'll do JLP also in detail. Don't worry, don't worry. We'll do that JLP thing, whatever is bothering you. Goodwill adjustments, if you have any doubts, we'll definitely do that. And after we finish partnership, we'll take up NPO and then company accounts. Yeah, and we should be able to finish it safe and sound. Yeah, not to be a very big trouble. Perfect, perfect. So tomorrow extend the class till 2 o'clock. Yeah, yeah. I don't mind Gautam, but I'd have to just check with the people as to is it possible to extend, because there are a lot of people who are attending other classes and they would have to leave. Another thing is, I don't know. Today I was very doubtful if I'll be able to take class. Last night, in fact, I thought I wouldn't be able to take class today by the kind of the condition I was in. And in fact, Grace, like you people wanted me to take, I was intending to take. Things will fine and I have enough energy to sit here and then talk to people today. Uh, I hope I'd have the same for tomorrow and then I'll take that class to people tomorrow. Yes, I'll send the Excel sheet today. Today, right now, right after this, I'll send the Excel sheet. Yes, guys. So that's it, guys. I hope I was able to add little value to your preparation for the examination. I'll just check if we can extend tomorrow's class. If we can, we'll extend. If not, we'll try and finish it in as much time. So remember, life is not a battle to be struggling. It's a game to be enjoyed. Till the time you guys are learning something new or having fun, it's all good. The day you guys either stop learning something new or stop having fun, trust me, you might start struggling because you might be in a battle. So thumb rule to stay happy is pretty simple. It is to stay in the game. So for one last time on this day, the only question that I have to you people is, are we in the game? I hope the answer is yes, we are in the game. I'll ask this question. Please do tell me yes, we're in the game. Are we in the game? I hope your answer is yes, we are in the game. Thank you for your patient listening. We'll definitely meet you tomorrow. We'll definitely catch up tomorrow to finish the remaining syllabus. And once this file is complete, I will definitely send that PDF of crash course material. And this file, I'll send it meanwhile. Excel sheet, I'll send it meanwhile. Okay, guys? Done. Chalo. Study, study, study. Don't waste any time. Use every minute, use every hour. And trust me, your glory is closer than you think. And your success will be more fruitful than you actually imagine, and the kind of happiness that it will come on your face the day you clear your foundation exam is something that I'm eagerly waiting to look forward for. Chalo, bye. Have a great time, guys.